Certainly moved US listings of UK bookmakers. Aker BP, new production stats out there. Airline sector in focus as we got those steep job cuts then from Boeing, Guy.
Absolutely. Right, here we go. Monday morning session. Time for the old world to get going. Here we go. The opening trade is upon us. Let's see what the numbers look like. We're not expecting a clear sense of direction, really, out of Europe. I think the London market may suffer a little bit. We've seen some volatility in the commodity space. That may get read through. You'll also see us, maybe going to see, as Anna suggested, maybe some action in the gambling stocks. We'll keep an eye on all of that. The airline sector could be important today. You've got Ryanair in focus, Lufthansa. Keep an eye on what is happening with those two stocks as well. So the Stock 600, just positive. The FTSE 100, just negative. The IBEX, absolutely flat. The DAX comes out of the gate. Obviously nothing happening in Germany because it's early. We're up by 0.2%. The CAC 40 is up by 0.1%. We've almost got a full sweep. We'll wait for the Swiss to get going. In the meantime, let's take a look at what is happening at a single stock and a sector level. Critty, what's going on?
Well, when you look at the index contribution, it looks like right off the bat, I should say, pharma, biotech seems to be the outperformer, although fairly broad gains that you were seeing in the European session. Look at the biggest index contributors, though, to the Stock 600. It's AstraZeneca, it's Roche, it's Novartis, and then it's followed by your sensational six, your ASMLs, your SAPs, and of course, it goes further and further down. When we're talking about the underperformers, though, Anna, it feels like commodity is on the back foot. Maybe that's what's weighing on the FTSE 100.
Yeah, energy also on the back foot, and we do have an oil price down by 1.3% this morning. Back to the top of the pile, Chrissy, another sector in focus, auto and auto parts. We've got, another of the core six moving higher. Ferrari doing well. We've got an auto show taking place in Paris, so we'll see whether that generates sufficient news flow to turn around any sentiment in that sector. Travel and leisure currently the worst performing sector, and that is where you find those gaming companies. So that's an interesting one to watch there. And we do see a little bit of weakness coming through on some of the gaming companies, but Entain yet to open, I note.
So oil stocks are down. You also got some of the luxury names down as well. So LVMH is a little bit softer. But in terms of where the points are coming off, it's Novo Nordisk, it's Rolls-Royce. It looks like BA's got a bit of an issue with its 787s and the Trent engines that it's running on those, which are causing some cancellation for some long-haul flights. So Rolls is down maybe on the back of that, but it's had a great run. Siemens is also a little bit softer this morning. BP is softer as well. So, there's a bit of a China read across, I would say, in this, plus a few idiosyncratic stories that we need to focus on.
Plenty to discuss there as well. Let's go right through the valuation stories. We're waiting for more of this to actually shake out here. Julian Howard was just with us earlier from GAM Investments. He was pretty downbeat on Europe, citing fiscal and security risks. Take a listen to what he had to say.
So there isn't the money. Even if they had consensus, what would they do? They need to spend money at the same time. They don't have that either. So Europe's position is pretty dire. And the ECB can help a little bit with rate cuts, but it's not the whole picture. There also needs to be consensus on how much is assigned to defence. I mean, I think that's the other point, and how quickly those defence companies would actually benefit. So again, that's not really clear from this perspective. All of it is kind of risk-laden.
He goes on to say that there's a perma-discount in Europe. What we've seen for almost decades come. Let's get another view this morning. Joining us now from Paris is Lilia Paytavin, portfolio strategist over at Goldman Sachs. Lilia, a pleasure to have you on the program. We're talking there with Julian Howard over at GAM Investments about that discount between what's going on in the States, what's going on in Europe. Maybe shine some light for us on this rainy Monday morning in London, Lilia. What is the bull case for Europe?
Hi, good morning. Well, Europe is about to start its third quarter earnings season. And I must say it doesn't sound very bullish because analysts have actually downgraded their estimates going into that third quarter's season by 3% over the past few months, while going into the second quarter season, they had revised up their earnings estimates. We have had relatively weak data coming from domestic demand in Europe, but also coming from China. And if I look at the auto sector, for instance, it's one of the sectors where we've seen the largest downgrades. And our analyst thinks that might actually continue going into the season. So it's true over the past few days, we've had a big stimulus on the fiscal side and monetary policy side announced in China, and that's very welcome for Europe. And our China economist has revised up her GDP forecast for China on the back of this. So we now expect GDP to grow 4.7% next year in China. That's 40 basis points more than what we had expected. And that's great, but she's not changed, her more longer-term forecast for China. And we still have the 3D issues, as she calls them in China. So aging population, the demographics, the large debt, and deglobalization. And none of that will be changed and impacted by the fiscal package that has been announced. So that's still a drag as well for Europe.
Well, Lilia, let's zero in on that China piece of the equation as well, because it feels like the other kind of hit here is not just about the fiscal package, which of course is being compared to what they had in 2009, but perhaps not to the same extent in terms of the global ripple effect, but also in terms of the fiscal package you're seeing right here in Europe. How much of fiscal money going into, say, the periphery or going into the defense sector is a sustainable kind of tailwind for Europe?
Well, I think that on the fiscal side of things, developed economies are all, generally speaking, struggling. So, obviously the headlines have been around the public deficit in France that seems to be 6.1% this year instead of the 5.5% expected by the governments until the past few days. So the French government wants to raise the corporate tax, cut spending, and France is not the only country in Europe. We also have Italy targeting companies and willing to impose windfall taxes. We might have also similar measures in the UK. And the US deficit is also extremely large as ever. So I think the room of maneuver here is quite limited. And what that means as well is that long-term bond yields might not fall as much as what you would see normally during periods where you have a normalization of monetary policy without a recession. Normally, these periods tend to see long-term bond yields going down. That's very positive for the equity market. When you don't have a recession and central banks are cutting rates, obviously, that's quite bullish. Now we are in probably a quite specific cycle where the valuations of the equity market have risen ahead of central bank easing. And we might, because of the debt issues, not see such a drop in long-term yields. So that's why, if you look at our forecast for the S&P, for instance, my colleagues have revised up their price targets. We have 10% upside. That's slightly less than the median annual return you get on the S&P, which is more around 12%. Okay. And this is more being driven by earnings than valuations. They actually think the valuation of the S&P could contract maybe by 1 P point over the next 12 months.
Lilia, in terms of the different parts of Europe and how they are performing right now, we have a survey of economists talks about weakness still continuing in Germany and possible recession there. We have been talking a lot about France and the challenges that France faces. How are you allocating geographically? Do you favor Spain versus others, or what's the strategy?
So in Europe, Generally, since we've had basically the same currency, the dispersion of returns tends to be driven by sectors rather than by countries, except during very specific moments, maybe during the euro area sovereign debt crisis, there's been a specific risk premium allocated to Italian equities, for instance. And I think the same applies right now. Like if you look at the DAX, for instance, it's an index which has generated relatively good returns despite the fact that the German economy is on the verge of a recession. So I think it's difficult to play countries in Europe, and you need to be quite narrow. For instance, in the very specific case of France, the corporate tax will rise, and it's quite unlikely that it will impact massively the CAC 40 because that index derives only 15% of its revenues from France. So you need to play that kind of measures with more targeted baskets, for instance, French domestic companies. These ones have underperformed French international stocks by 3% over the past months, and they might, be vulnerable to further measure. And also, even with this approach, you need to be quite nuanced because a stock like LVMH, which is international, it makes less than 10% of its revenues in France, you would think is unlikely to be impacted by the corporate tax hike. But LVMH actually is apparently paying about 50% of its taxes in France. So despite being international, that stock might be impacted by measures as well.
Lydia, how do I play China in Europe?
China in Europe, you would look at autos, basic resources, luxury stocks, basically all these sectors which have seen massive downgrades to their earnings estimates over the past few months. Our analysts basically see some weakness still in luxury names coming from Japan because the yen has appreciated, coming from China. And they do actually see some strength and resilience coming from the US high-end consumer. In terms of autos, as I've said, we've seen massive downgrades, and that might continue. So although probably most of the downgrades, I would say, are behind us, we can still expect probably, some volatility around earnings estimates for these stocks.
Leah, great to catch up. Really appreciate it. Thank you very much indeed for joining us this Monday. Lydia Petova, portfolio strategist, joining us from Goldman Sachs. Quick look at where we are in terms of the core six. This is what the picture looks like here. We have, as we've mentioned, Ferrari a little bit higher. An auto stock standing out on a day we start the Paris Auto Show. Keep making that mistake. ASML, Schneider, Nestle, all higher. Novo's a little bit softer. LVMH, definitely a little bit softer this morning. That's where we maybe see the French effect coming through. Let's talk about the other single stocks we're watching. Joe's got the details.
So we got some big declines in the gambling stocks this morning, Guy, following that report in The Guardian on Friday regarding Rachel Reeves potentially looking to tax the sector by around £3 billion at the upcoming budget. So Entain really taking most of the pain here. Remember, that's the owner of Ladbrokes, down almost 15% now. Evoke, this one owns William Hill, also 888, also hit another 12%. Rank, this is Grosvenor Casinos that you see around the West End, and Playtech, which runs a lot of the bingo sites, also lower as well. But really the worst performing sector we've got today, a massive drop for Entain. That follows that 9% decline for Flutter on Friday. Analysts at the moment kind of being a little bit sceptical about the extent of the taxes, but definitely the worst performing space today. In terms of the M&A stories, now there is breaking news around Singapore looking to potentially block a deal that Allianz is doing over in Singapore in terms of one of the insurance companies. Seeing a little bit of weakness there, but a couple of decent gainers in the UK. TI Fluid getting a massive increase to a previous takeover offer. It's around 200 pence a share. It closed at 150. This is in the parts space. And also Mulberry Handbags. This is Mike Ashley stepping up his attempt to take over that company via Fraser's Group, upping the bid. Mulberry, considering it is down in the small caps now, but it is one that's moving a lot today. Then, in terms of a couple of broker moves we're going to bring you, this is playing into one that Lilia was talking about, your guest just there, around French taxes. We've got Hermes cut to sector performer over at CICC, something we don't see too much of, but remember, that stock up around 25% over the past year, one of the best performing luxury firms. Then in terms of energy, Equinor gets an upgrade. Now, Morgan Stanley is actually more negative on the space given the decline in oil that we've seen recently, but they like Equinor on valuation, so they upgrade that one. And then finally, this one we mentioned earlier, BASF, the big chemicals company, cut at UBS. They are citing weakening macroeconomy for chemicals companies. Pretty interesting, and that one is slipping 1% in Germany today.
Joe, thank you. Joe Easton from our equities team with an update on some of the stocks that are moving around. And he started off that update talking about the gaming companies, talking about gambling businesses, and they're certainly on the back foot. As I said earlier, another day, another bit of speculation in the media here in the UK about what might be taxed come October the 30th, and that's the reality facing all of these businesses who have assembled to listen to Keir Starmer, the Prime Minister, talk about investing in the UK. Yes, they've got some of the broad strokes, but they don't have the detail around taxation and around a host of other things that they probably want before they make firm plans.
This is the problem. These things are in the wrong order. We don't know. So we don't know two things. We don't know what the taxation story is going to look like, and we don't know what the industrial strategy is going to look like. Two really big pieces in the puzzle to form a decision on whether or not you actually want to invest at the moment. And this is the problem that we have with this investment summit. Basically, Starmer and Reeves are going into it with one hand tied behind their back. Now, they tied it there, but nevertheless, that's what they're going in with.
Well, the mechanism, I think, is interesting here around windfall taxes and broadly, because you see it now. You see it in France. Of course, we've talked about that last week. You see it in Italy around the banking sector and arguably the energy sector as well. Spain has also been a part of that. How effective is it, though, if you're trying to spur innovation, if you're trying to bring the private sector to head up some of this investment summits, investment conversation, and yet, to your point, you're perhaps tying the other hand behind your back as well?
Yeah, and depending what sector you're talking about here, though, sometimes there's another policy push, isn't there? And I imagine with the gambling sector, there's that policy incentive that, perhaps you can exercise some of your other priorities by deciding what you tax, and maybe gaming companies stand out as some turf that they could look at for that purpose if they don't like what they do broadly and the risks to society that go alongside that.
The biggest problem that all of these countries have in Europe right now is growth. So we can tax, we can change kind of small things, we can tinker around the edges. But ultimately, if you want to fund public services at the level you want to fund them, if you want to give unions pay rises at the level you want to give them, if you want to provide defence at the level that society requires, you need growth.
Yes.
And that is where the challenge lies.
And at least the Prime Minister has talked about that a lot, and lots for Stephanie Flanders to talk to him about then when they sit down and have that conversation later on today. Coming up on the programme, JP Morgan topped third quarter expectations as it kicked off the US bank earnings season. Our preview of what is ahead for the other big US lenders, a lot of them reporting this week. That's up next. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
your challenge.
Britain was elected. Was going to keep Green World Cup. This is a 3 as the economic picture. Covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Season is here.
And once again, we find ourselves asking whether the earnings season can live up to expectations.
Bloomberg is first to break the numbers.
Just crossing the terminal, we have results from Heineken.
Getting SoftBank out. Glencore numbers are dropping as well.
I'll quickly mention Diageo because those numbers are coming out.
Smashing the estimates.
With the smartest insights.
What are you most looking forward to the second half of the year?
We've lifted the margin guidance for the year, so it's going to be good.
We will, of course, be bringing all the details.
Continuing coverage on Bloomberg.
I've been quite clear that I think the future could be quite turbulent. Cash is a very valuable asset sometimes in a turbulent world. And you see my friend Warren Buffett, stockpiling cash right now. I mean, people should be a little more thoughtful about how we're trying to navigate in this world and grow for the long term for our company. I prefer to wait. We will be able to deploy it. Our shareholders will be very well served by us waiting.
That was, of course, Jamie Dimon, potentially future Treasury Secretary. I joke. Talking about stockpiling cash, talking about his friend Warren Buffett, talking about turbulent times. Dimon also warning that 2025 NII hole will now come in below analyst estimates, while also keeping very much taking aim at questions on the topic.
NII, all things being equal, is a number, but all things are never equal. I think we spend too much time on just this irrelevancy, so you get a model and a number in your model, and so it's going to be less than 87 next year. Probably not a lot. We don't know, and we don't know the environment.
Don't know the environment. Don't know what's going to happen. Let's talk about the numbers. Let's figure out exactly what we're going to learn throughout the rest of the week. Remember, we've got JP Morgan and Wells. We're going to start again tomorrow with the bank earnings because we've got a holiday, in theory, in America today. It is Columbus Day. We've got Citigroup, we've got Goldman Sachs, we've got Morgan Stanley, all coming up later on this week. Let's bring in Bloomberg's Charlie Wells. Let's start off with JPM. Those were solid numbers. Is that a reflection of the US economy and the strength that we're seeing? Is that basically a microcosm of what we're seeing at a macro level?
It's interesting. I mean, Dimon on that call sounded annoyed, and he sounded some signals about geopolitical risk, a couple issues in the economy. But when you turn to the CFO, to Jeremy Barnum, he was a lot more optimistic. He talked about a potential for a soft landing, a no-landing scenario. We heard him talk about the American consumer. Of course, this is why we kind of care about these big U.S. bank earnings. They give us a really good read on where the U.S. consumer is. And he talked about how they're in great shape. And some of the consumption mix is changing a little bit. It's kind of moving beyond that post-pandemic experience shift and more toward a normal pattern of consumption, but emphasis on normal pattern of consumption.
Charlie, explain to us a little bit more about Diamond's annoyance. Why was he so upset about this focus on net interest income?
He got a lot of questions, to be fair to him, about it.
This was question 10.
This was like question 10 million.
Okay, right,
but
I get that
figure is really important, right? It's the largest source of revenue for these banks. It's been so positive for them. I think we spoke one point about how, these banks can thank Powell for the amount of revenue that they were bringing in. Of course, this is the first earnings report post that rate cut, and so there's a lot of concern about it. But look, on Friday, they had some good news. It was actually, they beat expectations. Net interest income was up 3%, but it's all about 2025. And of course, Diamond trying to set expectations there.
Where does Wells Fargo fall in all this? You kind of got the top of the pile and then I don't want to say bottom of the pile, but definitely not the top of the pile. Are they sending the same message?
They had a pretty good Friday as well, and it was a little bit more what you'd expect in this environment. So net interest income was down. They kind of missed expectations, down 11%, but their investment banking fees were up 37%, and that is what Charlie Scharf is really going to want to see. He's been plowing into that unit. He talked about diversification into credit cards, but the one thing, a kind of dark spot in their earnings call, was commercial real estate. We, of course, know their loan book has more commercial exposure than a lot of other banks.
Take Friday into this week. What is the lesson I learned from Friday that I can take into the numbers that we're going to get from the rest of the banks?
The lesson is don't take that cut in September and, smear it across all these earnings quite yet. It's going to be a kind of transition into this lower rate environment. Take what some of those CEOs said last month. We got a lot of warnings from Pinto at JP Morgan. Yep. We got warnings from Solomon about trading. I think that's going to be the focus at Goldman. How does their trading revenue come in compared to a really standout quarter in FICC last year? And Bank of America, let's try to get more of a read on consumer. I think, we heard from Barnum at JP Morgan, great, pretty good standing of the consumer. Does that follow in with Bank of America?
Interesting, though, that the clues so far, if you take Wells and JP Morgan, there weren't any huge red flags, were there, around the consumer? Certainly credit card, that sort of data standing up okay, Charlie, is that right?
You saw a lot of resiliency there. And I think one, though, aspect on the consumer that is of concern is the housing market. And Barnum there talking on the earnings call about, the housing market's a little bit stuck right now. And just because we got a slight downtick in Fed rates, that doesn't mean there's going to be this huge refinancing. That doesn't mean that the residential real estate sector suddenly starts to pick up.
Charlie, thank you. Thanks for the update. Bloomberg's Charlie Wells all over the banking sector. We're also watching closely what's happening with the gaming sector this morning. We see the likes of Entain down by 13%. A lot of weakness coming through on the back of that report in the Guardian newspaper on Friday that talked about increasing taxation on this sector as being one of the ways that the Chancellor might be trying to sort of make the numbers add up when it comes to the 30th of October.
Yeah. How do the numbers add up? That is going to be clearly something that we're going to watch out for very, very carefully. Which sectors are going to ultimately be in the firing line? Are we going to see the banks being put under pressure as well? They've had a few meetings at Downing Street. Maybe there's been some pushback on additional taxes for the banking sector. What can we expect out of the oil sector as well? Is that going to be another area that the government has to maybe turn to in order to raise some revenue?
Shall we check the luxury sector as well? Because the CAC 40 is underperforming a little, down by 0.2%, and luxury stocks not doing well today. So despite any recovery that we saw through the Chinese session and some positivity there, maybe not enough on the consumer side to satisfy European investors and what they want to see from the luxury sector.
Yeah, not to mention that perhaps a little bit of a reaction, given that it is France's biggest sector, to what we heard on Friday. Coming up, of course, we're going to dive into the China story as well. We're going to be hearing from George Magnus from Oxford University's China Center, getting his thoughts on what that weekend stimulus briefing actually looked like. Short on specifics, or did we get just enough? Stick with us. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
We have expanded the large scale of fiscal expenditure, setting a government deficit of 4.06 trillion yuan for 2024. We have issued 1 trillion yuan of ultra-long special treasury bonds, while making good use of the traditional government bonds issued in 2023. We will increase support for local governments to address debt risk, increase debt quotas on large scale, and support local governments to resolve hidden debts. Therefore, local governments can free up more energy and financial resources to promote development and promote people's livelihood.
Chinese Finance Minister speaking at that briefing on Saturday. China's highly anticipated stimulus message seems to be so far lacking the firepower that investors have been hoping for. Beijing promising more support for the struggling property sector. It's also looking at local governments, but economists aren't yet convinced that this is enough to defeat the deflationary story that we're seeing coming through in the data. Let's bring in George Magnus, Associate at Oxford University's China Centre. George, always a pleasure, sir. Nice to see you. What do you make of the efforts thus far from China? Is it enough? Will more be required?
Well, I think, as you said, from a market perspective, the press conference from the Ministry of Finance yesterday was a bit disappointing. I think people were expecting, that there was going to be some flesh on the bones of what had been a story going around about a 2 trillion yuan borrowing program split roughly between, helping out local governments and consumer, I was going to say handouts, but basically child benefits for families with more than one child. Anyway, the bottom line really is that it was a bit disappointing from that point of view because there were no numbers, there were no specific plans. But I suppose, we could hold fire because there's an important meeting at the end of this month, the National People's Congress Standing Committee, which is usually the body that approves specific numbers on borrowing programs. And so people, I think, are still quite hopeful that there will be, more specific numbers on borrowing later this month. The question is, what is it on? Okay. What are they going to use the money for?
Well, what are they going to use the money on? And to a certain extent, is spending money the right solution here? Is China in a liquidity trap? Is that the problem we now find ourselves with? And actually what is required is more structural change, of which there seems to be actually very little in what we've heard thus far, George.
Yeah, so this is the rub. I mean, a lot of what the government has announced so far, which set the market alight in late September for a couple of weeks, really was of the monetary variety, you know, cutting interest rates, cutting down payments on homes, cutting mortgage rates, this 800 billion yuan program for stock buybacks and for allowing non-banks to buy stocks and so on. So this is like Band-Aid, right? It's a relief, brings relief, it makes financial conditions easier, but it doesn't really change anything. The second part of the shoe that everybody's expecting to drop now is the fiscal shoe, which is about bond issuance for purposes of financing consumer demand specifically. Because there are some cases for financial engineering, which is, you know, debt swaps between central and local governments and relieving the bad financial conditions that prevail amongst many local and provincial governments. But that's not going to turn the economy around either. So the problem is twofold, really. One is the government sees China's economic problems as a counter-cyclical problem. They don't see it as a structural problem. And the second problem is that they don't really want to recognize the implications of structural economic reform because they're politically very, very awkward.
Well, George, I want to dive into that structural reform in a second, but before I do, I'd like to go back to the point you made about the stock market reform in particular. Given that China's stock market has kind of over-indexed retail exposure to it, does addressing the issues in the stock market, even as a liquidity kind of influx or as a buyer of last resort, ultimately help the Chinese consumer? Is that a connection we can make?
The short answer to that is no. So most of China's households own their wealth through two mechanisms, really, or two channels. One is property, and the other is low-yielding bank deposits. And of course, the problem with property is that prices are falling, and you know there's not very much confidence in the real estate market, and you know that may be something which will prove very, very elusive. But obviously, you know. We've seen this before, that in 2015, 2016, when the government tried to pump up the stock market to try to engender confidence into financial market participants, which are principally banks and SOEs, not retail. Now they're kind of trying seemingly to do it again. But I don't think this is going to have much of a spillover effect onto the consumer or onto households.
Well, let's go back to the bond issuance story that you mentioned as well. How attractive is that debt? I appreciate that you're more of a professor than an investor, but George, how attractive is that debt, or is the Chinese government even trying to make that debt attractive to international investors? Is that international demand relevant to the China story right now?
Well, I used to be an investor, so so I've got a bit of both. Yeah, I mean, you know, I don't think, obviously, because of the external bonds which have been, you know, which foreigners have been involved in, particularly those involving property developers. I mean, foreigners' experience with China's, you know, bond market hasn't been a happy one necessarily. And actually, the bonds which are going to be issued and which the government will issue approval for local governments to issue aren't really the kinds of instruments that foreigners are that interested in. You know, to be honest, I mean, the issue isn't really a shortage of money. I mean, they can issue, the central government certainly has space on its balance sheet to be able to leverage up and issue more debt, even if local governments are finding this really difficult. So there are ways in which they can issue more money to spend, but come back to the question really is, you know, and they will be bought because domestic investors will buy these bonds even if foreigners don't. But the question really is, what are you going to spend the money on, and how, and who? And that's the issue really, is about, you know, it's about how do you structure an economic a revival program. I mean, a lot of people, I would just say this final point, a lot of people think that China's government is actually not very interested in reviving the economy anyway. All they're interested principally in doing is stabilizing it so that it doesn't go down into a kind of a vortex of deflation, because Xi Jinping's principal priority is what he calls new productive forces, which is really about cutting-edge tech and science.
George, with your investor hat on, your legacy investor hat on, I wonder if I could ask you about the contrast between what you're telling us and some of the words we got from Goldman Sachs, for example. Now they're speaking mostly about Chinese stocks in this particular quote, but they're saying that there's a powerful and there can be powerful and tradable rallies that can exist even in a prolonged deflationary bear market. So they're sort of talking about the gains that can be found within Chinese stocks, even if some of these structural headwinds do still exist. I suppose both of these things can exist at the same time then.
Yes. In fact, I was the victim of one of them just for most of the last year or last few weeks. But actually, anyway, that's just another story really about my personal investment style. But yeah, of course. I mean, if you know how to trade Chinese stocks and you trust, your broker or your investment advisor to be able to get you in and out, easily or without too much trouble. Sure, these things happen. We've seen a number of spikes in Chinese equity markets. Very kind of staccato type of rallies. But actually, if you look at the kind of big picture, just draw a chart of the CSI 300 or the Shanghai Comp, and you can see 2 or 3 really powerful spikes. But actually, for most of the time, the market trades sideways. It's not really a very active market, I think, for long-term investors. But yeah, I mean, why not? I mean, I don't know whether the market has actually kind of spent most of its kind of force really during the last 2 or 3 weeks. We'll see, but I mean, there may be another leg up in it if there's something later this month.
George, well, something coming up in less than a month is, of course, the US election. What do you see happening in China to prepare for what could be a much higher tariff environment coming from the United States?
Well, to be honest with you, my gut feel is I'm not really sure it's going to make a huge amount of difference, in the sense that Chinese authorities, Chinese government will have had plenty of time to think about, what's likely to happen. I mean, obviously, if Donald Trump, gets to the White House, there's a sort of threat and even a plan to some degree of ubiquitous tariffs, which I think they would expect to retaliate against. If not, then they face an environment of export controls, so it's sort of a continuation of the Biden administration's different sort of approach. I mean, there could be additional policies introduced to try to target, Chinese goods or Chinese technologies. I think they probably well aware that, that there are in this adversarial environment, and they will be, even more determined than ever, I would say, to pursue their policy of self-reliance and to de-Americanize their supply chains as much as possible. I think in that sense, I don't think it really makes much difference who's in the White House, to be honest.
George, thank you. Always great to speak to you. George Magnus, Associate at Oxford University's China Centre. Thank you very much for that. I wonder how many Chinese cars will be on display at the auto show taking place in Paris. We'll be talking cars next. Oliver Crook is with us. He's at the Paris Motor Show. Ollie, what's coming up?
Yeah, that's right, Anna. And actually, you can see a few of them behind me from Leap Motors, which is the joint venture with Stellantis. So we've been here. We talk a lot about the auto industry and the slowdown there. This is really where the rubber hits the road. A chance for these car companies to put their products in front of their clients. We'll have conversations throughout the morning with the key CEOs. This is Bloomberg.
what about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
Tesla, the company that led the way in the EV revolution, is taking another leap of faith.
Elon Musk is a master at figuring out where the trends are and marketing to those, and AI is hot right now.
He wants to keep people thinking of Tesla as the company that is pushing the envelope and is really a tech company, not just an automaker.
Most important thing, as he sees it, is the robo-taxi, or what Tesla is calling the cybercab.
And its gambit targets not only the car industry, but ride-sharing as well.
If I own a Tesla, it can drive me to work. But if I'm on vacation and I want to make money, I can lend my Tesla to this shared autonomous robo-taxi fleet.
Though some big kinks need to be worked out first.
The human experience, as reflected in driving, is more complicated than people like Elon Musk thought.
Watching the event, my first impression was, is this just another Musk rug pull?
He's betting the company on this technology. It's a very, very risky bet.
You can, of course, watch the rest of this week's mini doc about Tesla's robotaxi on our YouTube channel or at Bloomberg.com. Guy.
Okay, let's talk about what that means, what he's doing, and how it's going to change the landscape for the European car sector, which is facing a number of different crises right now. It's been a brutal year for Europe's car makers. Just take a look at the numbers over the last 6 months. Sales slumping in the face of fierce competition from the Chinese. You've also got a union issue, which you need to factor into your thinking as well. You've got a tax issue. Look at what is happening in Italy. Look at what is happening in France right now. The Paris Auto Show is underway. Let's get a sense of what the vibe looks like, feels like there. Ollie Crook, as we know, is standing by. Ollie, what do the European automakers need to deliver at this show?
Yeah, Guy, listen, you walk around these halls, and this is really the EV car show. And for the European car makers who are facing what we've continuously been talking about, really that perfect storm of lowering demand, particularly in EVs, rising competition, and also these new regulations, Guy, which we don't talk about that often. At the end of this year, basically these European car makers need to sell about 20% of their fleet to be EVs. Otherwise, they could face literally billions of euros worth of fines. It's stuck right now at about 15%. So crucial for those automakers to bring these new sort of EVs to market, and front and center, Guy, is that price point. We know about the tariffs on the Chinese cars. That buys them a little bit of time. They need to be reducing that price point. So they're unveiling cars that are about 35,000 euros, some under 25,000 euros, and longer term, Renault is planning a car for, sub 20,000 euros. That's sort of still a far cry for some of these Chinese automakers like BYD, the Seagull, that retails for less than 10,000 over in China. But this is really the conversation here. And also, how do you adapt that strategy in the face of that sort of lowering demand? These are the kinds of conversations we're going to have with the CEOs here at the Paris Auto Show.
That's the European side of the equation. Talk about the Chinese automakers there as well, facing a very different situation just a couple months ago.
Yeah, that's right, Creedy. Just a couple of months ago, and 12 months ago, or a little bit over that, when we were at IAA over in Munich, they were so excited. We spoke to BYD, Xiaopeng, all of these automakers that were really very excited to come in and enter the European market. And as you say, from a couple of months ago, the picture has changed completely. You have these tariffs. They're not 100% final yet. There is still some hope from some of these automakers that they could negotiate either a better tariff or maybe some sort of compromise. That seems sort of unlikely right now. But what you have in terms of their broader strategy is it's basically unchanged, because as far as they're concerned, the European market is absolutely key for the EV growth. Obviously, China is enormous, but they really need to break into this wealthy market. The U.S., they can't really touch. They've got about 7% market share right now, and what they're trying to do here, even if they can't make the kind of money that they were hoping to make pre-tariffs, is to build that brand awareness and become sort of more present in the European consciousness, because it's only a couple of years from now when they're going to be producing these cars right here in Europe.
Okay, so that's the backstory then, Ollie. We've got a lot of headaches for the automakers, a lot of challenges they face, and competition from China is on the increase. We have a lot of brands here. I'm sure there are a lot of brands on display where you are. Are they all going to survive?
Well, listen, that's the big question, Anna, and I think that we're sort of early in this sort of crisis where we're talking about, can all of these sort of brands really survive? I mean, Stellantis alone has got 15 brands. Volkswagen has got any sort of number of them. And the real question is, for a smaller car maker, like let's say Renault, for example, can they continue to sort of compete with those massive car makers on their own? So we'll be speaking to the Renault CEO a little bit later. How do you defend over being a potential takeover target when in a sort of very, very crowded room, when you can see sort of behind me all of the brands that are sort of behind us here, and also here, with the Leap Motors, for example, which has got this partnership with Stellantis. How many of these sort of joint ventures are we going to see to be able to split potentially manufacturing capacity in a world of more protectionism?
Thanks, Ollie. Thanks for joining us. Bloomberg's Ollie Crook joining us there from the Paris Auto Show. So we have a lot coming up when it comes to the car sector. Later today, as Oliver was saying, we'll be speaking with the CEOs of Stellantis and Renault, as well as a host of other leading figures from the European auto industry. All of that coming to you from that Paris Motor Show. Here in the UK, as we've been mentioning, the Investment Summit is taking place in London today. Prime Minister Keir Starmer and Chancellor Rachel Reeves hope to be able to announce billions of pounds of major investment deals in AI, in life sciences and in infrastructure during the summit. We're joined by Bloomberg UK correspondent Lizzie Burden, who's got details of what we can expect from the event. So take us through then, Lizzie. Good morning. Some of the detail of what we're expecting to be announced today.
Well, big picture first. The government's top priority, of course, is to grow the economy, and they say that investment is crucial to that, hence the spotlight being on London. We're expecting Keir Starmer to be surrounded by the global bosses of finance and tech, and to say that he wants to rip out the bureaucracy that blocks investment and do everything in his power to galvanise growth. Now, what does that mean? We're expecting an announcement of £50 billion of private sector investment into the UK economy, but half of that was already announced last week for green infrastructure. We're also expecting an announcement on the industrial strategy to tell us which sectors the government favours. But we're not going to get details on that until next spring. So the ongoing frustration that we have to wait for detail from the Starmer government.
But we still don't know what's in the budget.
Indeed. And there's so much frustration about the choreography of this, that they would put the investment summit before the budget. Why not give us the policies on October the 30th and then tell us the messaging around it at the investment summit, or potentially more detail? That is not what's happening here. And we have worries about potentially employer national insurance contributions going up. This was not denied by the business secretary over the weekend, on top of the fears about changes to capital gains. So these very people who Keir Starmer wants to attract, who will be surrounded by today, could be packing their bags and out of the UK after October the 30th, if some of the warnings are correct.
So that employment story is significant. So it's interesting. There's a line in the FT this morning: economic uncertainty holding back hiring, says Page Group. This is the problem, that we find ourselves in a situation where we don't know yet some of the major issues that we're dealing with, and as a result, hard to make decisions long term if you don't short term know what's going on. Lizzie, thank you very much indeed. Bloomberg's Lizzie Burden. We've got some fantastic interviews coming up as a result of this summit that is taking place. The centrepiece of those interviews, of course, will be with the UK Prime Minister. Keir Starmer. That is going to be taking place a little bit later on today with our head of economics and government, Stephanie Flanders, at the UK International Investment Summit. The interview is taking place at 2:30 p.m. London time. We're also going to be hearing from the CEOs of Barclays, Lloyds Banking Group. They're both exclusive and will be coming up shortly.
Certainly something we're looking forward to. Let's talk about what else we've got going on this week. Of course, we were just talking to Oliver Crook live in Paris at the Paris Auto Show, talking about the automakers there. But then we've got our focus on more data, more earnings on both sides of the Atlantic. On Tuesday, the eyes, or I should say the spotlight, back on the banking sector. Goldman Sachs, Citigroup, Bank of America, all reporting on the earnings story as well. Not to mention the slew of data. We started the week with China. We're going to end the week with China as well. Plenty of retail sales on both sides of the Atlantic. But let's talk about the ECB here. That's the decision on Thursday. Lizzie will, of course, be on the ground in Slovenia, I believe, to cover that decision for us. Does it really change the dial now that we've heard some dissent between the Federal Reserve, now that we're talking about the pace of rate cuts? I wonder what the conversation will be.
Yes, and we don't have the expectation that they'll go 50, do we? But you're right that the Fed has sort of broken that taboo if anybody wants to, and we have seen other central banks moving in that kind of increment, so not everybody going 25, but I think the expectation has shifted from nothing to 25 for this month, hasn't it? Just after September, there was no expectation we'd get these back-to-back cuts, but now that seems to be coming.
It's interesting, the Fed made the decision, Powell made the decision, kind of almost unilaterally it felt, in order to go for the 50. The ECB feels like it's being pushed to make these decisions. It's being pushed by the data, by the economic numbers, by the terrible situation that we're watching develop here in Europe in terms of the slowdown in growth to make these decisions. Yeah. It feels like the Fed's the master of its own destiny. The ECB feels like it's reactive at this point.
And that's just the monetary side. We're not even talking about the fiscal piece that maybe the monetary may have to react to in a couple of months, especially for the Federal Reserve reacting to the U.S. election results. But even right here, when we talk about in just the last, I want to say 24 hours, but 48 hours, 72 hours, where France did get this kind of outlook downgrade as well. Everyone's on alert for what deficit concerns means for yields, what it means then for monetary policy.
Yeah, and what governments can do to spend in the meantime. We mentioned the UK has made some announcements around spending. We've yet to see the full details of the budget, so we'll keep that one under review. But yes, the market can constantly weighing up then what monetary policy actors are going to be able to do in the context of fiscal constraints, I suppose.
Well, okay, Steve Blitz was here earlier on in the last hour. He was talking about 6% Treasury yields.
Yeah.
If you get 6% Treasury yields, where does that leave Europe? Because there is going to be a gravitational effect. It means that the monetary policy story is going to be blunted. Yes, it probably it would affect the front end less, but nevertheless, the cost of money is going to be higher.
He's talking about a much more inflationary world there, isn't he, than we've known just, post GFC, before COVID. And a lot of people seem to talk to us about how we are in a different place. Even Jamie Dimon was saying about all these inflationary forces, and yet we still have central banks around the world supposedly targeting 2%. You wonder if we're just going to accept that we're missing those targets more than we used to miss those targets.
And it's fascinating what Steve Blitz said about that 6%, though, and the fact that he said it's if the budget isn't addressed. But let's say, I'm going to play doomsday for a second. Let's say it isn't addressed over in the States, or if you still have these budget deficits in Europe as well. What is the worst case scenario? In Europe, you see it in bond yields and bond spreads. We've seen that with France and Germany. You see that in terms of the ECB. In the U.S., where else do you go? They don't address it. What happens? Do you then see a bid into the Treasury market, say the way you did in 2011?
Well, no, I think you see the Treasury market on offer, and that's you see yields going higher. The term premium required is going to be greater.
Yeah.
You're likely to see a slightly more inflationary environment, but you're going to see the bond market is going to demand more.
Yeah.
What impact is that going to have on growth ultimately, I think, is going to be really interesting.
Yeah. And in the very short term, this week, back to things that we're watching, we'll get the bank earnings story, and that'll give us a clue around the consumer and where that side of things goes. Even if the consumer signals that came from JP Morgan and the rest seem to have been quite positive, we'll see whether Bank of America and the like tell us something similar. That is it for the opening trade. The pulse is up next. We have some big interviews coming, including the CEOs of Barclays and Lloyds Banking Group. All of those conversations coming up shortly from the UK Investment Summit. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bouncing back, Chinese stocks rebound to cap their best day in nearly a week as Beijing reinforces its commitment to shoring up the economy. European stocks edge higher. Making his pitch, UK Prime Minister Keir Starmer will unveil his vision for Britain to executives at the International Investment Summit in London. We are on the ground. We're speaking exclusively with the Prime Minister later today. We will also be speaking exclusively to the CEOs of two of Britain's biggest banks through this hour. Plus, European car makers descend on Paris to showcase low-cost EVs in a bid to reverse slowing sales. We are live in Paris with an interview with Renault's CEO. Let's check in on the European markets map then. Yes, the impulse positive from mainland China. Those markets up around 2%. You've got a little bit more detail, no dollar numbers, but the Ministry of Finance came out with that briefing on Saturday and additional measures being outlined by other officials today around the need to support business, and particularly a hint from the Ministry of Finance over in China that maybe they're going to borrow more to try and support that economy. The UK, currently the FTSE 100 up 0.2%. Is technology at the top of your list in terms of sectors, and on the downside, travel and leisure. The DAX up 0.6%. The CAC a little bit more muted, just 0.1% the gain over in France. Let's split the board and look cross-asset then. A big week in terms of the central banks, the ECB decision and the earnings story out of US banks after the beat that came through for JP Morgan. S&P futures up 0.1%, the pound at 130, Brent 77.78, currently down 1.6% on oil, and gold holding at 2,660, up 0.2% on the yellow metal. Let's get the show started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom Mackenzie in London. Now, China's highly anticipated Finance Ministry briefing on the weekend lacked the firepower that equity investors had hoped for. As we said, though, Chinese mainland stocks are up in the session today. Beijing has promised more support for the struggling property sector and local governments, but economists are not convinced it is yet enough to defeat deflation in China. Let's get more on the market reaction with Morwenna Coniam from Bloomberg's Markets Today team, who's been tracking this alongside the team. Morwenna, thanks for joining us around the studio. So, the messages from the Ministry of Finance over the weekend were we will support the property sector. There was no dollar number. There was a bit of a hint from the Ministry of Finance or the Finance Minister that maybe they would expand the borrowing. We don't have that, of course, confirmed yet. And a little bit more support today in terms of the business environment in China. And mainland stocks have reacted positively. What do we make? What do you and the team make of what we've been hearing from China and what it means as to whether or not this equity upside has legs?
Well, that's a very good point. I mean, they have been gaining towards the end of the day in China.
Yeah.
I think that initial concern that maybe these didn't go far enough, there wasn't that dollar figure, and that is a real concern. But overall, the sentiment that is that there is this commitment to having that fiscal support, and that's gone a bit of optimism. We have to remember that although Chinese stocks have been quite volatile in recent days on this, they have been relatively undervalued compared to peers. That's for a whole host of reasons, and I think what the market's really trying to figure out right now is how much that's sort of fair and how much that there is room to actually invest and take advantage of weakness. We're seeing, obviously, the stocks have gained towards the end of the day on that confidence. Looking at what's happening over in Europe, the China-connected stocks, particularly looking at the UK, which my team does, things like the firms which have a financial exposure to China, like HSBC and Prudential, and the miners in particular, which are very dependent on Chinese demand. They're not underperforming, but they're not having a stellar day, and that really follows what we've seen, I think, in terms of, yeah, this is actually a bit reassuring, but there's no sort of big wow factor there. There's still some uncertainty. These measures have to be signed off at a meeting later this month, and that's really something that does have to be waited for. That's when last year, there was a revision to the budget. That's where really we're going to see a bit more tangible facts from this.
So we look to that next meeting for hopefully a bit more detail on these proposals. Meanwhile, US stocks, of course, notching fresh records on Friday, the 45th record for the S&P. Part of that was down to the JP Morgan and banking story. We have more bank earnings out of the US on Tuesday, and then, of course, the ECB decision. What for you and the team is going to be central for the markets this week?
Well, I think, like I said, there is data coming out of the US this week as well, which will give you a better sense of what's going on with the sort of manufacturing industry. You get a few of those jobless figures, which the impact of Hurricane Milton starting to come through just on an initial basis. But all of that is, there's a lot of data coming through. But earnings-wise, things are starting to ramp up. Like you said, US banks really positive at the end of last week, which saw a record. But in Europe, when we're looking at that, the ECB is going to be key. It has started to look like they might be considering another cut because we had that weaker data. That seems to be a persistent message. Okay. Concerns about, employment maybe not being quite as strong as it was. So that's really going to make an impact across the European markets this week.
Yeah, you and the team are going to be kept busy with all of this. Morwenna, thank you very much indeed for the preview, of course, of some of the key factors for these markets this week. Morwenna Coniam from our Bloomberg Markets Today team. Later today, Bloomberg will be speaking exclusively to the British Prime Minister, Keir Starmer, as his government hopes to announce billions of pounds of major investment deals in AI, life sciences and infrastructure. Let's cross over right now to Bloomberg's Francine Lacquart, who is at the UK International Investment Summit alongside politicians and CEOs, of course, from around the world. Francine.
Yeah, thanks so much, Tom. It is a packed room that you can see right behind me. We have a number of chief executives. We have a number of ministers. Larry Fink also flew over from the U.S. But I'm delighted to really talk about what's needed in the U.K. now, joined by Charlie Nunn. He's this chief executive officer of Lloyds Banking Group. Charlie, as always, thank you so much for joining us. If you were Rachel Reeves, what kind of message would you give investors today?
Well, I think the really important thing to get more investment in the UK is firstly clarity and a clear direction for the country. And so the stability and the clarity this government's trying to give, I think, is really important. Investors want to invest in the UK. They're looking at the UK relative to Europe and the US and Asia. And at the moment, the UK looks like a good destination. But the first thing is clarity and stability. The second thing is, tell me where you're going to invest alongside us and do it in a way that enables us to bring private capital to work. We estimate that there's about 40 to 50 billion pounds worth of investment per year for the next 20 years. So the government can't afford that, but the private sector really can make a difference. And then the third thing is really enable the financial services sector to unlock its potential to support that investment.
But, Charlie, so you're one of the key components actually trying to get this foreign direct investment into the country. Where would you deploy it? Where will it be deployed?
Well, I know the government's going to come out with their kind of industrial plan, and they're talking about 8 sectors. 2 examples that I think there's huge opportunity. One is around the energy transition, and the UK is already a leader around offshore wind, but floating wind, onshore wind, the growth in solar, and in some of the new technologies like carbon capture and hydrogen, there's huge opportunities to invest. And that also needs a clear plan for the national grid and the electrical infrastructure. That's one example of a huge opportunity for investment. Another is housing. So the government's made a commitment to build 1.5 million new homes. We need more social and affordable homes specifically. That's something we have called for as Lloyds Banking Group. And we really need to get the money invested, start going behind, breaking down the planning laws and building more homes. And that'll be good for jobs and productivity and create an environment that we can get the skills for the investment in business.
But, Charlie, so I guess a lot of people are concerned by the fact that, of course, this government needs banks, as you say, to bring in private capital, to deploy some of the money, to help them actually also help with the National Wealth Fund. At the same time, they're talking about taxing the banks. So how do you square the two?
Well, obviously, taxation's a matter for the government to talk about. But irrespective of whatever kind of political decision they take on that, as Lloyds Banking Group as an example, we've got a £900 billion balance sheet. We do 80 to £100 billion worth of lending per year. We have £200 billion worth of pension assets we manage on behalf of Britain pensioners. We need to put that money to work, and then we partner with some of the biggest world's pension funds, private credit funds, and our job is to bring our expertise to channel that into the UK. So there's huge opportunity for us to continue to deploy that capital in smarter ways that drives productivity, growth, and jobs to get the UK economy to being the fastest growth economy in the G7, which is a really bold ambition.
A number of your competitors, NatWest and Barclays, have done recent acquisitions showing basically that they really support this economy. Are you looking to do something likely as well?
So, you know, we're now 3 years into the 5-year strategy I laid out. And the great news is it's very much a growth strategy, and we're delivering well against that. We're going to do an update in February next year on the first checkpoint in that strategy. And I'm really pleased with the progress we've made. We've done some bolt-on acquisitions, but the core of our strategy is an organic growth strategy. And the great thing for Lloyds Banking Group is we're typically the number 1 or number 2 player in every segment and product we participate in, including, in fact, in investment in the UK, project finance, infrastructure finance, housing finance, where we lead in the UK. So, no, we'll look at acquisitions opportunistically. Our core strategy is organic, and we're feeling good about where we're going.
What do you want on pensions? Pension, but also there's a lot of talk on actually risk-taking, and this takes years, not months, that the government has.
Yeah, so pensions are such an important part of the puzzle. As I said, we are a leading pensions provider in the UK, £200 billion worth of pension money. And I think there's a few things that really matter. The first is we need to get more of our customers' money into pensions. About 40% of the UK households aren't on track for even a basic living standard. And obviously, giving them financial resilience is good for the economy. So we need to increase enrolment around pensions. The second thing is, how do we invest it safely and appropriately for them in high-risk assets? And actually, that's more about conduct risk and fiduciary risk than it is around changing or asking the investment managers to invest more in those kinds of projects. We need to look at how do you support customers to make those choices in this country. And that's something we're talking closely with the government and the regulators about.
You know the new investment minister. How many questions do you think she'll field from international investors about the budget? Is this investment summit a little bit too soon, as we don't really know what happens to non-doms, what happens also to carried interest, and other questions?
Well, no, and the first thing to say is you can hear the buzz in the room today. It's great to see the excitement about investing in the UK and to have the international investors here. It's very, very early days for the new investment minister, I think 4 or 5 days in. I know her ambition is to increase overseas investment into the UK. And the kind of investors we're talking about are the big international pension funds, the big international sovereign wealth funds, the private credit funds. And they're going to be looking for good projects with a good return, with a government and a country that's getting behind making those investments successful. That's what will matter. It won't be some of the things you're talking about. And so I hope that she's really focused on engaging those kinds of organizations and then working with our financial services sector, which has the expertise to put that money to work. And we're the leading financial service sector in the world, let me say that.
Charlie Nunn, thank you so much for joining us. That was the Chief Executive Officer of Lloyds Banking Group. I'll hand it back to you in the studio, Tom, and then we'll be back in just a couple of minutes with Venkat of Barclays.
Okay, great stuff. Francine Lacroix, of course, on the ground for us, speaking exclusively with the Lloyds Banking Group CEO, Charlie Nunn there, of course, talking about the opportunities in the capital markets here and how to deploy some of that investment. Coming up, we're going to return to the UK Investment Summit for an exclusive conversation with the Barclays CEO on the advice he would give to the Chancellor, Rachel Reeves. That's coming up. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back. The chief executives of the UK's largest banks are calling on Chancellor Rachel Reeves to oversee a change in the country's approach to long-term investment. Signatories of the open letter include the Lloyds Banking Group CEO, Charlie Nunn, who we just heard from, of course, as well as the Barclays chief executive, C.S. Venkatakrishnan. And he is standing alongside Bloomberg's Francine Lacroix at the UK Government Investment Summit for an exclusive conversation. Francine.
Thank you so much, Tom. I am excited speaking to Venkat again, Chief Executive of Barclays. Venkat, as always, thank you so much for your time. What would be your main message, actually, that Rachel Reeves and the Prime Minister need to give investors as they try to get investors to come in the country and deploy capital?
I think the most important thing is to recognize the strengths of the UK, not just institutionally, but economically. This is a government that's dedicated to growth. It's going to take the tough decisions to deliver growth in the country. And I think with growth comes a lot of opportunity in the UK. And the growth is going to come from investment and from easing up of restrictions. So I think we're going to see the start of what might be a very promising time for the country.
Where do you see that opportunity?
I think it'll be in some very important sectors at the high-tech level, in climate technology, in pharma and software, and down to more basic things like housing and agriculture, which are an important part of the economy.
Venkat, I think it's in February that you committed to deploy around £30 billion in the UK in the coming years. Is that easy to do? Do you know? Do you have a clear idea of where you want it to go?
Yes, we want to provide financing to corporates and individuals across the UK. We are going to, at the end of this month, complete a tranche of that, which is £8 billion when we buy Tesco Bank's credit card portfolio, which we then look to grow. And we've already started the turnaround in deploying assets for SMEs, for corporates, for individuals. And so we do think it's possible, and we will look for opportunities to fulfill that ambition of ours.
we'll hear more about this industrial plan, but when you look at some of the things that are challenging, we have, of course, the October budget coming up. Do you worry that they're not quite landing the message, that they're a little bit too negative about the economy, and so that hurts spending?
Well, I think it's important to land a positive message, which is that inflation is under control, growth is eminently possible, the UK is a great trading nation, we've got great infrastructure, as you see, and wonderfully talented people. We employ many thousands of them here at Barclays, not just in our retail operations, but in our investment bank, where our traders compete with the rest of the world, as you know. So I think it's important to land that message and to show demonstrated commitment towards the investment that's required to generate growth.
Venkat, we also know that the government is ready to spend $7.3 billion in taxpayers for a new fund. Do you know who else will come in from outside? Have you spoken to international investors who are quite keen to participate?
Yeah. So I think it's a very important start, the National Wealth Fund, which will then be leveraged with private capital to produce 20 billion plus pounds worth of investments. I think the international investors, as well as domestic arms of international investors, and we have many of them here today, will see important opportunities, and it's going to be organized in a very professional way with the UK Investment Bank, and so we will see a lot happening there, I think.
I mean, does it feel good being in the UK right now, also because it's a little bit of a mess elsewhere?
Absolutely it is. You know, we were very lucky when we did our February announcement to have made that commitment then. That was before the elections. But we anticipated, and we said it then, that whether it was Conservative or Labour, you had pro-growth policies in the UK. And now when you see how smooth the election was, the handover has been, when you see problems elsewhere in the world, I think you realize the strength of the institutions in the UK and how committed everybody is to delivering growth.
This, of course, is an economy in transition. They want to build more houses. We'll have the industrial plan. It needs, again, to attract a lot of capital. What are you most optimistic about on where this capital concretely can go into?
I think it can go into some very important sectors of the economy. There will be, on the riskier end, things like climate tech and biotech and pharma. Not necessarily risky in some absolute sense, but obviously these are ventures, right? And then on the other side, I think when it comes to housing, I think the risk rewards will be extremely generous because I think housing is an important need of the country.
I mean, when you speak to a lot of investors, international, they say, look, what they worry about is the red tape. That other countries, including the US, if you want to put $1 billion in this country, you call someone and they help you find it. Do you think with the appointment of the new investment minister, that will be streamlined?
Yeah, I think so. I think appointing that investment minister and appointing Poppy Gustafsson with the background she's had as an entrepreneur is an important first step, and it's an important statement. I think the government recognizes that there need to be priority sectors, and then in those priority sectors you've got to push, and you've got to have investors convinced that they can get the implementation done quickly, and then hopefully it'll feed on itself.
What are you expecting for the October budget? Again, a lot of people in finance are worried about what could come. Does it make a material difference to investments in the long term?
I think there are two aspects of it. There's taxation, and then there's, of course, investment for growth. The investment for growth is really important, and I think laying out the quantum of money, how it's going to be generated and funded is important. But I also think there's a lot of capacity and willingness to invest. You've seen the appreciation in sterling in the last number of months. And so I think that there is a real force behind the UK.
When you look at taxation, again, does it send the wrong message if there's a tax on the banks whilst at the same time you're trying to attract capital?
Yeah, I'm not going to speculate about where the taxes might fall, but I think, look, banks are among the highest taxed entities in the UK. We're an important part of the economy. And I always say it's really important for the UK to recognize that the financial industry is in its national interest. We are a big part of employment, we are a big part of technology, we are a big part of foreign imports into the country, revenues, exports, which we make. And so we are a really critical part of this industry, and it's important to recognize that.
What do you need from the government?
Well, it's not so much what we need as how we look to help. We would like to help them mobilize the finance and mobilize the investment. So we are here to help.
Venkat, I think final question, when you look at inflation, when you look at, of course, consumer spending, you have the data to try and understand where the economy is going. Are you optimistic?
I'm optimistic from the following point of view. Over the last decade, number of years, 2 to 3 years, the consumer in the UK has been extremely careful. Whatever the rate of inflation has been, what we see in our spending data is their spending growth has been half of that. That's because they're being careful with their money. Now they're saving a lot. The other part of this, we did put out a piece recently that there's about £430 billion worth of savings that the UK consumers have, which they can deploy towards investment. That's the private part that needs to be harnessed in this country.
What do you worry about the most in general? I mean, you run a very large institution that's globally recognized.
Well, there's obviously geopolitical risk. We have an important elections in the US in a couple of weeks that has to go through. We have to get to the other side and see what policy there might be, whoever wins. And then the new alignment with the emerging markets, with China, with Japan, and of course the UK and the US. Europe is important, but Europe also has a little bit of policy harmonization to do, shall we say.
Venkat, as always, thank you so much for joining us.
Francine,
so that was
thank
Venkat Krishnan from Barclays. With that, Tom, I'm going to send it back to you in the studio, and we'll have plenty more from the Global Investment Summit, of course, throughout the day.
Okay, Francine Lacroix on the ground, speaking exclusively there with the Barclays CEO, CS Venkat Krishnan. Francine, thank you. Let's just get you up to speed with some breaking lines in terms of the data out of China. We had the inflation print, a reminder that there is still a deflationary risk to that economy. But in the last couple of minutes, we've had some exports and imports data in terms of dollar numbers, the way it's categorized. Very weak when it comes to the export line for China, much weaker than had been expected. Exports inching up just 2.4% in dollar terms from a year earlier, so up 2.4% from a year earlier, well below the estimates, well below the previous month. Imports as well, climbing just 0.3% for the most recent month, the month of September. That export number, by the way, that increase of 2.4% is the weakest print that we've had in terms of exports out of China since April of this year. So a reminder of the challenges. That had been one motor of the economy that had been chugging along better than other parts, for example, the real estate part of that economy. But exports now softening in the most recent print that we get out for the month of September. Imports also cooling as well for China. And at a time, of course, when officials there are trying to reiterate and underscore and flesh out the policy response to try and shore up that economy. Now, China's military is holding drills around Taiwan, meanwhile on the geopolitics, that it says are a warning to the self-ruled island's government to halt what it calls separatist acts. The spokesman says the exercises involve Army, Navy, Air and Rocket forces. Taiwan's Defense Ministry says that it dispatched forces to respond. Coming up, the US is sending an advanced missile defense system and troops that operate that system to Israel to deter Iran. We bring you the latest on the Middle East conflict. That is coming up next. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories this Monday. Bouncing back, Chinese stocks rebound to cap their best day in nearly a week as Beijing reinforces its commitment to shoring up the economy. European stocks have given up their early gains. Making his pitch, UK Prime Minister Keir Starmer will unveil his vision for Britain to executives at the International Investment Summit here in London. We will be speaking exclusively with the Prime Minister later today. Plus, European car makers descend on Paris to showcase low-cost EVs in a bid to reverse slowing sales. We're live on the ground in Paris shortly with an interview with Renault's CEO. Let's get to the geopolitics and the crisis that continues to unfold in the Middle East. The US is sending an advanced missile defense system, including the troops to operate it, to Israel. In response, Iran's foreign minister has said that Tehran has no red lines in defending itself from threats and that the US is putting the lives of its own troops at risk. For more, our Horizons Middle East and Africa anchor Jumana Pasechi joins me. Jumana, talk to us about the significance of this defense missile system being deployed from the US to Israel.
Well, it's no coincidence that we also got some comments from the Iranian foreign minister there. And of course, all of this is anticipation of the Israeli response to the Iranian ballistic missile attack that took place on October the 1st. The Pentagon announcing yesterday that they are going to be supplying Israel with this advanced air missile defense system. It's known as THAAD. The acronym stands for Terminal High Altitude Area Defense. And essentially, it's a battery that is operated by about 95 American troops. And what is significant here is this actually will be the first time since the October 7 attacks that U.S. forces will be deployed to Israel to assist with Israel's self-defense. Now, again, it is anticipation of that Israel reprisal to the Iranian ballistic missile attack, but it also occurs on the heel of a further Hezbollah drone attack into northern Israel and central Israel. IDF saying this morning that 4 soldiers were killed, 7 critically wounded, and about 60 others wounded as well. Hezbollah saying that they're going to continue firing rockets so long as the Israel ground incursion in Lebanon continues. And so what you're seeing here, Tom, is very much an expansion of the regional conflict.
And we also, of course, have the human toll, and you talk about part of that there with the attack on the Israeli military and personnel in Israel by that drone. And then, of course, the events that unfolded in the last 24 hours or so on the ground in Gaza and the Lebanon.
Yeah, that's right. The Lebanese Health Ministry just putting out a new toll now, saying that the total number of people killed since the beginning of the conflict is now total 2,255. So that number continues to go up. There have been airstrikes, further airstrikes around southern Lebanon and in parts of the Shuf, which is the mountainous area as well. But the ground incursion continues, and actually the IDF allowed some reporters to come in to some of those towns by the border to show them some of the military infrastructure that the IDF say that they have succeeded at dismantling. But crucially here, and Tom, this is becoming a bit of a diplomatic issue, some of the tunnels that the IDF pointed to were located very close to the UN peacemakers, the UNIFIL units, bases in the southern part of Lebanon. And in the process of doing these ground incursions, it appears as though several or more than a dozen of these UN peacekeepers were also injured and wounded as well, which has prompted a response from the EU and even from the Italian Prime Minister himself. Giorgia Meloni actually put in a call to the Israeli Prime Minister Netanyahu over the course of the weekend, saying that these UNIFIL peacekeepers should be off bounds as far as the IDF is concerned. There are about 10,000 peacekeepers stationed in the southern part of the country. 1,000 of them are Italian. And what the Israeli Prime Minister is saying is that in some cases they are acting as Hezbollah human shields because they've allowed their bases to operate very close to Hezbollah infrastructure. So this has yet been another development that has occurred in the last 24 hours, in addition to ongoing strikes. In northern Gaza, 400,000 people have been told to evacuate. Central Gaza as well, further strike at one of the hospitals. A tent caught fire there, costing the lives of well, what the Gaza Health Ministry says is around 20 people. So further developments in the last 24 hours, and all this in anticipation to that Israeli response to the Iranian ballistic missile attack.
Okay, Horizons Middle East and Africa anchor Jumana Pasechi with the important update there. Out of the Middle East, Jumana, thank you. Now, US President Joe Biden has announced $612 million in recovery aid for areas hit by hurricanes Milton and Helene. The funding will go towards strengthening the region's power systems. Biden says damage from Hurricane Milton alone could cost $50 billion. Kamala Harris has called out Donald Trump for keeping his medical records out of public view. That's after she released a detailed report by her physician that revealed she's in, quote, excellent health. The vice president needled Trump for keeping his records private, saying it's, quote, a further example of lack of transparency. Meanwhile, Trump pledged on Sunday to recruit 10,000 new people to secure the US-Mexico border. He also committed to providing a 10% salary raise for existing agents and a $10,000 retention and signing bonus. Coming up, we're going to head to the Paris Auto Show, where we're going to be joined by the Renault CEO, Luca De Meo. Stay with us for his take on whether Europe's automakers can stave off the competition from China. That conversation coming up. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
there is this real momentum from Wall Street.
We're basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back. Now, Boeing shares are lower pre-market. That's after the plane maker announced plans to cut around 10% of its global workforce. That equates, by the way, to roughly 17,000 jobs. Joining me now is our global aviation editor and editorial leader, Benny Camel. Benny, what do we know about these potential job cuts? What is prompting it? Will it be enough to stave off some of the damage that is inflicting this aircraft maker?
Yeah, so Boeing slipped this out late on Friday. They announced the job cuts as part of a wider package that they unveiled. They also unveiled fairly comprehensive charges to the tune of about $5 billion. That's coming up this quarter. They're going to delay some programs and so on. So really a sort of bouquet of fairly bad news. On the job cuts specifically, we only know the number, 10%. As you said, that equates to about 17,000 people. The company said it will be across the board, so executives, management, workers, which is sort of probably a nod, sort of some sense of solidarity. But we don't know exactly when they might happen. We don't know what it'll cost. If you try and get rid of 17,000 people, that usually costs something in severance. So those are all things that we don't know at this point. And we also don't know whether this is enough, whether 17,000 people will get them over the hump in terms of cost cuts, or whether more might be needed going forward. You did mention that they're in a very difficult financial situation. The earnings are due on the 23rd of October, so we'll know more then, hopefully.
Okay, so we look ahead to the earnings. Whether or not, I guess, this is also a warning shot across the bows of those who are still on strike at Boeing. What do we understand about the CEO's kind of longer-term strategy, Benny, and how this move fits into that strategy? How convinced are investors that this new CEO is at least on the right path when it comes to the longer-term plan?
It's probably a little bit too early to say at this point. Kelly Ortberg has been in the job for about 2 months. That's not very long, given the sort of the size of the task that lies in front of him. Some investors we spoke to said, well, this all feels a little bit slapdash and a little bit reactive. There are no sort of contours of a larger plan visible at this point. So hopefully, come October 23rd, that's when he'll speak publicly for the first time as part of that earnings release. We'll find out a little bit more. There was one sentence, sort of a half sentence, that was slipped into the release from Friday, which we thought was quite interesting. And it was essentially saying, we need to think about what is core to Boeing. I'm paraphrasing here, sort of what is core to Boeing and what is not. And that might give people a bit of a hint of assets that may not be considered core going forward. And there are some, like the defense and space business, that have clearly struggled. And that might be something that going forward we will see. It could go as far as a wholesale breakup of Boeing. I'm speculating here, but that's something that people latched onto.
Well, it's interesting you talk about space with Boeing, because we had a reminder, of course, of the role, at least the leadership role that SpaceX is playing, of course, owned by Elon Musk, in terms of the future of space and the ability to have one of their rockets re-enter the Earth's atmosphere and land safely. The images were amazing. What does it tell us about the role that SpaceX now has, Benny, and in fact how some of their competitors, whether it's Boeing or others, need to compete in the gap that they've created here?
Yeah, I agree. It was pretty remarkable to see the booster rocket be caught on that tower. And in some ways, it's sort of almost that split-screen movement. You've got everything going wrong on the Boeing space side. We have these astronauts who've not been able to come back in the spaceship because it was considered too buggy. And on the other hand, you have Elon Musk and SpaceX pulling off this quite remarkable feat. We're seeing the footage here right now with a landing. So sort of everything going right in space on one end and everything going wrong the other end, with all the issues and the costs associated with that. That obviously means that this is a losing battle for Boeing, and it's something that will become more pronounced going forward as Musk puts more rockets up, does them in faster intervals. That's the other thing you need to remember. They're putting these rockets out there at a pretty sort of high clip, whereas Boeing is years behind. So one side moving quickly, the other moving slowly, and at some point it'll be very difficult for Boeing to catch up.
I like that characterization, the split screen moment between SpaceX and Boeing on the situation when it comes to their ambitions in space. Global Aviation editorial leader Benny Camel, thank you very much indeed for the latest. Coming up, JP Morgan topping third quarter expectations. That was on Friday, of course, as it kicked off the US bank earnings season. We will preview, though, what is ahead on Tuesday. The other big US lenders, at least a number of them, including Goldman and Citi, reporting later this week. We will give you that preview. Stay with us. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back. European car makers are looking to shake off their woes of the past year, showcasing their latest electric vehicle offerings at the Paris Motor Show. Let's cross over right now to join Bloomberg's Oliver Crook, who's on the ground at the auto show with a very special guest. Ollie.
Yeah, that's right, Tom. This is really where the rubber hits the road for the car industry. We talk about the macro, we talk about sales globally, but this is really the opportunity for the CEOs to put their products in front of the clients. And I'm very pleased now to be joined by the CEO of Renault, Luca De Meo. Thank you so much for joining us today on Bloomberg. So listen, you've launched all of these new cars, the EVs, in front of a backdrop of EV demand falling precipitously. How are you adapting your sort of strategy there?
I mean, actually, we have a strategy since 4 years on two legs. One is we have very strong hybrid technology. It's working pretty well. We're number 2 and number 3 in Europe on the hybrid segment, on all segments. But on the other side, we made the decision to develop 2 platforms, one for small cars and one for medium cars, full electric, because we think that these are 2 different sports. And, you know, an EV and an hybrid car are 2 different animals. And here you see the result. The good thing about that is that you can get out cars like Renault 5, Renault 4, or the Twingo, legendary product, you know, and with the best, probably the best EV platform for small cars in the world.
Right, and then in terms of this sort of magic number for the pricing on EVs, what do you think that is in order to have it really take off here in Europe?
Look, I think we speak too much about list price of the car. What you should include in the equation is also, you know, the cost of using this thing. So normally charging is 50%, 30% of fueling, okay? And the maintenance cost that is actually half on a car. So normally we should talk about that. But if you look at the Renault 5, it's 25,000 euro as a starting price. It's actually 10,000 euro less than any of the competitors. Why? Because we actually focus on the whole ecosystem, the platform on this. With the Twingo that you see, you know, close to us, we will be able in 2026 to go below 20,000 euro in entry price. I think it's a kind of a decent, you know, proposition already. I mean, above 25,000 euro, you probably have 50–60% of the European market in general.
And really a difference from what we were talking about a year ago, right? In terms of emissions regulations, you've been very outspoken about this. The EU, on the one hand, wants to sell more EVs. On the other, is going to make it more difficult starting next year. How much do you intend, or how much do you think you're going to have to pay in terms of fines coming next year?
I mean, as an industry, we estimated that if the market continues at that speed, which is half of what we should be, for a number of reasons. It's not necessarily our fault as an OEMs, because we were the ones that have engaged 250 billion euro into the thing. So we have all interest that this thing works. So there's nobody in the industry that actually discussed the decarbonization path. Is the rhythm and the way and the mechanism to adjust to get to the target. This is the important discussion. So we calculate that it's more than 15–16 billion euro if it continues like this. But then you have people like us that are trying to bring, let's say, a solution like this one. I mean, I give you an information for Bloomberg. We actually made 35–40% mix of EV this weekend on the open door in France.
Wow.
So it means that when you have the product, maybe you can change the destiny of the thing. But I speak as a president of the ASEA, I have to speak for the whole industry, right? And if you look at the speed, it's not enough. So we need everybody behind, also the consumer, because we are doing something that is good for the collectivity of society.
So what do policymakers need to do in order to get that? If they don't want to change their desires, how do they change the desires of the consumer?
I think we are, let's say, you know, this is our responsibility with the product. I think we need to accelerate the charging infrastructure. I think we need to give transparency of the pricing of electricity and find a way to make it at least stable, this thing, so that the people. And I believe that, you know, in some of the areas, you probably need some support to boost the demand, because the demand is at that level is not natural.
Yeah, and then as president of the ASEA, do you see factory closures this year in Europe happening at a sort of more rapid pace?
If the thing goes like this, you know, one of the solutions to make the math and to make the average fleet, you know, one of the solutions is to actually stop producing combustion engine cars that are big offenders. And we made the estimation, it's like between passenger car and utility vehicles, like a commercial vehicle, it's probably, we estimate 2.8 million cars. This is 10 plants in Europe. So that's the, of course, the way you get there is, you know, you buy credits to the Chinese to Tesla, you push the price of EVs so that you kill the baby, you know, and the cradle, or you know, you stop producing, let's say, a combustion engine car. If you only do that, it's 2.8 million cars. So it's big story.
And then I have a quick question for you in terms of your view on the EU's approach on the tariffs with China. Do you see that you could potentially have a partnership with one of the Chinese companies here? Is that going to be the new model going forward, kind of inverting what we saw traditionally?
We always said, I mean, I don't comment on the tariff thing because this is almost a legal thing. This is based on an application of the rules of the WTO that everybody signs. So
sure.
I have nothing to say again.
Sure, but you adapt your business as a function of what happens with regulation.
Yeah, I mean, I adapt my business. I don't have a lot of transaction between China and Europe. This is true maybe for other companies. So I don't want to comment on that because this is nothing to comment from a business point of view. What we also said is that without a good cooperation with the Chinese, I think it will be more difficult to ramp up electrification in Europe because they have in their hands, materials, chemistry, gigafactory capacity, battery capacity, etc. So we need to find a deal with China, okay? And we need to get used to a form of co-petition, or that means basically on the one side you compete, on the other side you cooperate, as actually they did with us when we went 25 years ago in China to take also advantage of the Chinese market.
And then a final question for you. Did you watch Elon Musk's presentation of the cyber cab? What did you make of that, the autonomous driving?
But look, I think, I think we are investing in autonomous driving. I guess Renault will kind of be a follower. We have initiatives with a company called WeRide to go to a level 4. I'm more interested, honestly, in looking at cars that are evolutionary, connected, intelligent, that can speak, where, the man-machine interface is very modern. So I'm more interested on using the power of technology to make kind of machine become humans. That's, I think, most important. And then, so I don't want to comment on anyway, Tesla's endeavors and strategy. It's not, I'm not an opinionist. I'm a competitor. So.
All right. Well, Luca De Meo, thank you so much for your time there, and sort of the future of the car industry and how he sees this sort of future of the machine and human beings sort of collaborating in the future for this industry. Back to you, Tom.
Yeah, there we go. And a sub €20,000 EV, maybe by 2026. Bloomberg's Oliver Crook on the ground for us, speaking to the Renault CEO, Luca De Meo, at the Paris Motor Show. Ollie, thank you. We're going to be speaking, by the way, to the CEO of Stellantis as well, Carlos Tavares, at the Auto Show. You're going to be able to catch that conversation at 1:10 p.m. London time. That is today on Bloomberg. Now, to banks, and JP Morgan reporting a surprise gain in net interest income for the third quarter and raising its forecast for the key revenue source. JP Morgan kicking off then US bank earnings on Friday alongside rival Wells Fargo, with Bank of America, Citigroup, Goldman Sachs and Morgan Stanley all set to report later this week. Let's bring in Bloomberg's Charlie Wells then and start, Charlie, briefly the top line that came through from JP Morgan. This was a decent set of results.
It really was. I mean, they beat on net interest income, which actually, people were expecting a slight decline. They had a slight uptick there. Investment banking revenue was really positive, and you also saw a similar story at Wells Fargo. So their investment banking fees were up 37%, and that is just the sort of thing that the Wells Fargo CEO Charlie Scharf is trying to push into as he tries to diversify that bank.
Okay, Charlie, thank you very much indeed. We're short on time, but we have the other banks reporting tomorrow, including Goldman and Citi, and Charlie's going to be across that story for us with the detail and the context, of course, through this week. Bloomberg's Charlie Wells. A reminder, by the way, of some of the big executive and exclusive executive interviews that we have coming up on Bloomberg TV. We also have the UK Prime Minister, Keir Starmer, speaking with Bloomberg's Head of Economics and Government, Steffi Flanders. That is at 2:30 p.m. London time. It's a Bloomberg exclusive, sitting down with the UK Prime Minister. And on Tuesday, we're going to hear from the former US President, Donald Trump, Republican presidential nominee, of course, sitting down with Bloomberg Editor-in-Chief John Micklethwaite for an exclusive interview live, 5 p.m. London time. Up next, it's Bloomberg Brief with Danny Berger in New York. This is Bloomberg.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Danny Berger. Manish Cranny is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. More to come. China's latest finance briefing leaves economists wanting more, but Goldman upgrades its outlook. No respite. Boeing to slash 17,000 jobs as a plane maker lurches from one crisis to the next. And the U.S. is sending Israel an advanced missile defense system and associated troops to deter Iran. Well, it is a partial holiday in the U.S. Bond markets are closed. Bottom of your screen, bond futures a little bit weaker. It is Columbus or Indigenous Peoples Day. S&P 500 futures move higher this morning after a 45th record high on Friday. CSI 300 up nearly 2%, a volatile session. We had China's highly anticipated Ministry of Finance conference on Saturday. We're going to get into the details of that in a little bit. Oil moving lower, perhaps because investors wanted more details out of China or maybe some geopolitical risk being taken off. Brent crude at $77 a barrel, down 1.6%. So as you can see there, Chinese stocks ending 1.9% higher. The government signaled that more aid will be coming for the property sector and local governments. Let's cross over to Bloomberg's Jill Desis on this. Jill, there seems to be a mixed reaction to this of those who say that they wanted more details and those who say it's promising. What did we hear exactly?
Yeah, well, Danny, at this point, we're pretty much waiting for any kind of breadcrumbs from the Chinese government to try to get us some idea of how else they're going to try to sustain some of the stimulus. I think broadly here, what we saw out of the finance ministry on Saturday was a lot of disappointment in the lack of a really big headline number. Going into the weekend, a lot of analysts, investors kind of watching out for what we were expecting out of the finance ministry. We're thinking, are we going to get something to the tune of 2 trillion yuan, somewhere around 300 billion trillion US worth of stimulus, whether that be, maybe cash handouts, other checks, things like that to sort of help move the needle here. We didn't really get that. What we did get, though, was a promise from the finance minister to sort of ramp up some other forms of stimulus. There was a hint there that maybe they might make a mid-year budget revision, try to issue more sovereign debt in order to get things going again. But yeah, I think that's why you're seeing some of that volatility in trading today, where you've got a lot of investors sitting there trying to digest this and say, well, it does sound like help is coming, but because we don't have that headline figure out of that press conference, it's kind of hard to figure out exactly what that ultimately means.
How then did someone like Goldman, Jill, upgrade their target 2024 growth just under 5%? That's an upgrade from 4.7. Deutsche Bank, a similar upgrade too. What pins those if we don't have those details you're talking about?
Well, I think that when you're looking at some of these forecast upgrades, including that one from Goldman, they're looking at the totality of things that have been announced so far. So remember, what ultimately kicked off the Chinese stock rally a few weeks ago, right before China went on this big week-long holiday, was this big promise of monetary policy stimulus from the government. So you had the governor of the People's Bank of China come out with this really, really unprecedented statement saying that they were going to launch all of this additional stimulus, including rate cuts. That really, sent stocks in a high that's caused a lot of economists to look at their forecast for the year and say, well, now what it looks like China is doing is they're trying to introduce enough stimulus to at least get them up to around that 5% growth target for the year. I think what you're seeing there from Goldman, I mean, context is everything here, but upgrading to 4.9%, notice that kind of puts them just in line with that growth goal for the year. Does it really put them over? No. What does it mean for, stimulus in the future going into 2025? We'll have to ultimately see, but at least tells us that a lot of economists are coming in line here with this idea that so far, from what China has announced, it's enough to, again, reach that growth goal for the year.
Jill, just at that point, because we are ending towards the end of the year, the world is still left waiting. Are there more calendar events? Are there more things to come that we could get further announcements, or was this weekend kind of the big thing and, I don't know, anything else will be unscheduled?
There's definitely some more room for additional announcements, Danny. I'd say that a lot of investors are probably looking out for a meeting of the Standing Committee of the National People's Congress at the end of the month. Maybe we'll get an announcement on when that date is ultimately going to be set, but they do have an opportunity, these top leaders, to talk at the end of the month about whether they need to introduce additional fiscal stimulus. Plus, there's some additional meetings of top leaders toward the end of November, December. You've got the Politburo meeting. You've got this big economic work conference before the end of the year. So yes, I would say that one thing that's probably keeping investors hanging on for more is whether any of these future updates that we're getting before the end of 2024 actually provide additional stimulus, although it doesn't seem like that big bazooka type stimulus that investors have really been climbing for is in the cards right now.
Jill, appreciate it as always. We'll catch up with you later in the show too. Bloomberg's Jill Desis there. Let's get over now to Sonia Martin, head of FX and monetary policy at DZ Bank. Sonia, thank you so much for joining this morning. It's great to see you. There has been a mixed reaction to what we heard from China over the weekend. Jill was just talking about the Goldman upgrade. What did you make of it? Does it change anything for you this weekend?
I mean, obviously the market has been somewhat disappointed. I think the lack, as it was just mentioned, of a headline figure was what creates some uncertainty. But it is likely that we'll get more detail. The National Congress will be sitting later this month, and there's an expectation that maybe at that point we will get some more concrete data and numbers. The bigger problem with this package is obviously that it's probably targeting more the banks and other sectors and not so much consumption. So I think that's one of the reasons why people aren't becoming overly optimistic. The growth forecast for this year are to edge high, but it's a big game changer for the market. And I think that explains the lackluster market reaction this morning.
So what do you do with currencies directly exposed to this, Sonia? Not just the renminbi, but things like Aussie, Kiwi. Is it a story to sell on?
Well, I think these currencies are looking more toward their central bank's direction. In New Zealand, we've had a very kind of volatile history in the last few months of monetary policy. They're kind of all over the place with their forward guidance. And I think that's where the focus is. I think for that to change, you'd need to have a much bigger growth story out of China, and we're not likely to get that. So I think it's back to national context rather than China.
Sonia, Bank of America has a credit investor survey out this morning, and it says that concerns over geopolitics are now the highest in a decade. We see that in fits and starts be reflected in oil prices. But Sonia, People are concerned, but should it be reflected elsewhere in this market?
Well, that's a really interesting question, because what we have obviously seen is that while there's crises everywhere, and reading the newspapers is a bit of a chore these days, fact of the matter is that financial markets are, on the surface at least, still very, very relaxed. And that's not because they're completely ignoring the risk, it's because their calculation is that it's a risk that is not going to have a direct impact on the market. And this all comes, of course, via the oil price. That could, of course, change within seconds if the wrong thing happens. But fact of the matter is that right now, it's sort of a lingering risk, but they're not necessarily being priced in, because for that to happen, it would have to escalate further, which we all hope won't happen. And financial markets don't really have a high moral standard. As long as it doesn't have a direct impact, they're quite happy to ignore it, although it does, of course, create some underlying uncertainty. But we're not seeing it as a price.
Yeah, no, it's fair enough, Sonia. We see this time and time again, the market's inability to price in geopolitics. We were with Peter Scheer on Friday of Academy Securities, who said the risk here is inflation. You add in geopolitical crisis, potential impact to oil, plus a U.S. election with huge fiscal deficits likely to build up. Sonia, does all of this lead back to a stronger dollar and higher inflation, and maybe even rates that need to take a pause?
Well, I mean, let's imagine a scenario where one reason the prices inflation, and look at the U.S. in particular. Should Donald Trump win the election, should he get a big majority, obviously expect higher tariffs to a massive.
Hey, Sonia, I'm just gonna jump in there. Unfortunately, we're having a little bit of an issue with your sound, so we're actually gonna have to leave it there. We really appreciate your thoughts this morning, Sonia. We'll have to get you back soon. We'll work on that connection. Sonia Martin of DZ Bank. Just a quick check on currencies this morning. Dollar is stronger, about 0.1%, a little bit of a weaker euro. We do have an ECB meeting to come this week. Fiscal issues are in concentration. France now on watch from Fitch of a downgrade because of the growing deficits and their plans to tackle it there. Okay, let's get to some top trending stories on the terminal this morning. Boeing shares, those are slipping in the pre-market, down 1.5%. A strike now is entering into its second month. That's been eating into cash reserves. Now the plane maker will be cutting 10% of its workforce. That is around 17,000 jobs. There are no details yet, though, as to exactly where those cuts could happen. In a Friday memo attained by Bloomberg, CEO Kelly Ortberg hinted that more dramatic action might be needed to get the company back on course. Now, over the weekend, amazing pictures here. SpaceX managed to catch a portion of its rocket using what are essentially giant mechanical chopsticks. Those pictures, again, so cool. A critical milestone for the company in a quest to create a rocket that's capable of flying to the moon and then to Mars. SpaceX also won key approvals for 2 rocket systems in recent days. Now, it is the Paris Auto Show today, but instead of new designs or technology, the thing that drivers are looking out for this year is price. Stellantis, Renault, VW all plan to showcase their latest budget EVs at the event. European automakers, they are all under pressure to revive slowing sales, especially those in China. Here's what Renault's CEO told Bloomberg at the show just moments ago.
We have a strategy since 4 years on 2 legs. One is we have very strong hybrid technology. It's working pretty well. We're number 2 and number 3 in Europe on the hybrid segment, on all segments. But on the other side, we made the decision to develop 2 platforms, one for small cars and one for medium cars, full electric, because we think that these are 2 different sports. And, an EV and an hybrid car are 2 different animals. And here you see the result. The good thing about that is that you can get out cars like Renault 5, Renault 4, or the Twingo, legendary product, with the best, probably the best EV platform for small cars in the world.
Right. And then in terms of this sort of magic number for the pricing on EVs, what do you think that is in order to have it really take off here in Europe?
Look, I think we speak too much about list price of the car. What you should include in the equation is also, the cost of using this thing. So normally charging is 50%, 30% of fueling, okay? And the maintenance cost that is actually half on a car. So normally we should talk about that. But if you look at the Renault 5, it's 25,000 euro as a starting price. It's actually 10,000 euro less than any of the competitors. Why? Because we actually focus on the whole ecosystem, the platform on this. With the twin that you see, close to us, we will be able in 2026 to go below 20,000 euro in entry price. I think it's a kind of a decent, proposition already.
Renault CEO Luca Di Maio there speaking with Bloomberg's Oliver Crook. Coming up on the program, the U.S. is sending an advanced missile system and associated troops to Israel, all in order to deter Iran. We're going to bring you the latest on the Middle East conflict. And later in this hour, we're going to catch up with J.P. Morgan's Jack Caffrey on the shift from a fear of a hard landing to soft landing to no landing at all. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings stick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America,
the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in New York. Let's turn to the conflict in the Middle East, where fighting continued over the weekend. A Hezbollah drone attack killed 4 soldiers in Israel, that according to the IDF. In Gaza, reports of an Israeli strike on a tent camp next to a hospital killed 4 and burned several. The U.S. is also sending Israel an advanced missile defense system, including troops associated with that. In response to the move, Iran's foreign minister says that the U.S. is putting the lives of its troops at risk. For more, let's get over to Horizon's Middle East and Africa anchor, Jomana Bersecci. Jomana, we're still waiting for what Israel says will be their retaliation to Iran. What's the significance then of the U.S. providing more air defense systems?
It's certainly very significant, and of course, it is even more so because the Iranian defense minister felt like he had to say something. But yesterday, the Pentagon announced that they were sending this advanced missile air defense system to Israel. It is called the THAAD system, Terminal High Altitude Area Defense. It is a battery that also needs the help of about 100 American troops to be operated in the first place. And that also is quite notable because it would be the first time since the October 7 attacks that U.S. troops are sent to Israel in support of Israel and its self-defense. Now, of course, all of this comes in anticipation of that Israeli reprisal to the Iranian ballistic missile attack that took place on October the 1st. An NBC report came out on Friday afternoon suggesting that according to their intelligence, Israel now has centered its response on military and oil infrastructure as opposed to some discussion about the potential to strike back at some nuclear targets or even individual or specific members of the IRGC. But of course, we are waiting, the whole world is waiting for this response, and it is significant that the U.S. has now supplied Israel with the further equipment to support their own defense system, because as we know in the past couple of months, Israel's air defense system, the Iron Dome, David Sling, have been challenged multiple times due to those Iranian and also ongoing Hezbollah drone attacks.
Right, because before, for the most part, just the official lines from the U.S. had been one of de-escalation, not necessarily this being a big deviation for that, but the hope had been for de-escalation. But on the ground, Jomana, the reality seems very different.
Absolutely. And so you just listed several of the events and developments that happened over the course of the weekend. This morning, notably, IDF said that 4 soldiers were killed, 7 critically wounded, following on from a drone attack from Hezbollah, who continued to fire rockets from southern Lebanon. And Hezbollah saying this morning that they did indeed fire more than 30, they made more than 30 attacks at northern Israel, central Israel, in response to an Israeli airstrike on Beirut last Thursday, that killed more than 20 people. Hezbollah then going on to say that they were not going to continue, they're not going to stop with these attacks, rather, as long as Israel continued their ground incursion in the southern part of the country. And also to that effect, the ground incursion has continued. The IDF have shown that they have been successful at dismantling some of Hezbollah's military infrastructure in the southern part of the country. But crucially there, keep an eye out as well on some of the language coming through from the UN. Some peacekeepers have been targeted. The UNIFIL group have put out a statement this morning saying that it contravenes international law, and it is a violation of international law that peacekeepers are targeted. So that is another story as well, a development that has really come to the surface in the last 24 hours too.
Jomana, thank you so much for that update. That's Horizon's Middle East and Africa anchor, Jomana Bersecci. Okay, coming up, we're going to take a look at what else is making headlines around the world, including the UK's International Investment Summit. Keir Starmer is speaking there. We have live pictures of that, as you can see. Bloomberg's Stephanie Flanders will be speaking with Starmer at 9:30 a.m. Eastern as he lays out his vision for Britain's economic future. We'll also hear from the Barclays CEO at that very summit.
High standards around the globe. A location that means we can speak to our colleagues in the Americas or Asia in the same day. A high ranking in the Global Innovation Index every year.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep Green World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The UK is currently having its annual investment summit right now. Prime Minister Keir Starmer currently speaking at that, making the case to investors around the world to trust in his new Labour government. Bloomberg caught up with the CEO of Barclays. Here's what he had to say.
This is a government that's dedicated to growth. It's going to take the tough decisions to deliver growth in the country. And I think with growth comes a lot of opportunity in the UK. And the growth is going to come from investment and from easing up of restrictions. So I think we're going to see the start of what might be a very promising time for the country.
Where do you see that opportunity?
I think it'll be in some very important sectors at the high-tech level, in climate technology, in pharma and software, and down to more basic things like housing and agriculture, which are an important part of the economy.
Venkat, I think it's in February that you committed to deploy around £30 billion in the UK in the coming years. Is that easy to do? Do you know? Do you have a clear idea of where you want it to go?
Yes, we want to provide financing to corporates and individuals across the UK. We are going to, at the end of this month, complete a tranche of that, which is £8 billion when we buy Tesco Bank's credit card portfolio, which we then look to grow. And we've already started the turnaround in deploying assets for SMEs, for corporates, for individuals. And so we do think it's possible, and we will look for opportunities to fulfill that ambition of ours.
We'll hear more about this industrial plan, but when you look at some of the things that are challenging, we have, of course, the October budget coming up. Do you worry that they're not quite landing the message, that they're a little bit too negative about the economy, and so that hurts spending?
Well, I think it's important to land a positive message, which is that inflation is under control, growth is eminently possible, the UK is a great trading nation, we've got great infrastructure, as you see, and wonderfully talented people. We employ many thousands of them here at Barclays, not just in our retail operations, but in our investment bank, where our traders compete with the rest of the world, as you know. So I think it's important to land that message and to show demonstrated commitment towards the investment that's required to generate growth.
CS Venkatakrishnan, the Barclays CEO, on the UK's hope for investment. Let's quickly get you some front page news, a look at what's making headlines around the world. First up, the Post has this. Hurricane recovery officials in North Carolina relocated amid reports of armed militia. According to emails, FEMA had moved personnel from hard-hit Rutherford County to a different area because of threats to government workers in the region. Next up on the Journal, the scale of Chinese spying is overwhelming Western governments. Beijing conducting espionage activities on what Western governments are calling an unprecedented scale, including securities agencies, private companies, Chinese civilians. Finally, on the New York Times, Harris has been struggling to win over Latinos. Meanwhile, Trump has been holding his grip. The polls show. Okay, coming up, we'll have more politics and markets for you.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Manis is off for a much-deserved holiday. Let's set your agenda. More to come. China's latest finance briefing leaves economists wanting more, but Goldman upgrades its outlook. No respite. Boeing to slash 17,000 jobs, with the plane maker lurching from one crisis to the next. And the U.S. is sending Israel an advanced missile defense system and associated troops to deter Iran. Your bond market closed today, just futures trading. They are weaker this morning. It is Columbus Day. Equity markets are trading. S&P 500 futures up 0.1% after the 45th record high on Friday. Chinese equities ending up nearly 2% after a finance ministry briefing over the weekend. We'll get to that in just a moment. There was some slight disappointment over it, perhaps why Brent crude is down 2%, or perhaps because we haven't seen a retaliation from Israel to Iran. That's currently at $77 a barrel. The offshore Chinese yuan, it is weaker this morning. We had the latest data jump out of China showing a setback in exports. It's an area that had been a bright spot for the economy. Chinese stocks, though, ended the session higher before we got that data, with Beijing over the weekend signaling more stimulus to come, but maybe lacking the details that some had wanted. Joining us now is Bloomberg's Jill Desis. So, Jill, what were the details we wanted and perhaps got and didn't get?
Yes, well, Danny, I think at this point, investors were really hoping that there would be something on the fiscal side to support a lot of this big monetary policy stimulus that we saw out of the central bank just a couple of weeks ago. Going into the weekend, investors were really hoping for something to the tune of maybe 2 trillion yuan, the equivalent of around $280 billion US worth of stimulus, including maybe cash handouts, that kind of thing, to help boost the economy and really to help consumption there. We really didn't get that, though. What we did get instead out of the finance ministry was some pledges that they'd allow local governments to use special bonds to buy up unsold homes. That's been part of this bigger push by the government to try to solve some of the nation's property crisis issues. We also saw a little bit of a hint that maybe they'd be open to issuing more sovereign debt this year as a way to kind of help support local governments, which are dealing with really strong debt burdens right now, and that would require probably a mid-year budget revision there. We'll have to see whether that actually materializes, but really here it's this sort of story where, yes, there's this promise of more stimulus, but because we didn't really have a big headline number to attach to everything, that's where you're seeing a lot of volatility in markets and trading today, and some of that disappointment kind of carry through.
Where does the optimism then come from, Jill, with Goldman Sachs increasing their growth target 4.9% for China in 2024, up from 4.7%?
Well, really what Goldman is looking at here is the totality of measures that China has taken over the past several weeks, because ultimately what investors are kind of disappointed about right now, or at least where, again, that volatility is coming through, is what is this expectation that there would be a big fiscal boost to follow what we're already seeing from the central bank. So Goldman is factoring in a lot of those rate cuts that the government has announced, some of these additional easing measures that the government has announced to kind of help the economy reach its target of about 5% growth for the year. So it seems that Goldman's kind of factoring in some of those issues. I think really where the longer view comes in is what does China's economic growth story look like, not just through the end of this year, but also over 2025, 2026. And that's where investors are wondering, even if you've got enough that ultimately helps propel growth up at the end of this final quarter into the end of the year, are you actually doing enough to solve the property crisis longer term, sort of solve a lot of these deflationary issues that you're seeing within China right now? And that's where there's still a lot to be desired, at least on the investor front.
Joe, appreciate it. That is Bloomberg's Jill Desis out of Hong Kong. Joining us now here in the studio in New York is Jack Caffrey, Equity Portfolio Manager at JP Morgan Asset Management. Jack, thanks so much for getting up early, for joining today.
Oh, thank you for having me.
So it's this narrative pendulum, which you've talked about for some time, that's been going on for the best part of a year. A lot of it has been concentrated on the data on the Fed, but the Chinese stimulus had been a portion of it reawakening global growth. What's the ability of the China narrative at this point, without a lot of detail, to really reawaken risk on?
I think looking at the totality of what's been announced over the past, call it 2.5 weeks, it's been much more focused on the balance sheet rather than the income statement of China overall. When you think about reserve rate cuts, when you think about interest rate cuts, trying to stimulate the stock market, talking about doing something in the bond market in order to create conditions for more clarity around how you actually get that growth, how you get that income going. But the challenge is always, not to overuse the analogy, the pendulum. Markets prefer clarity. They want to know X dollars by Y date, and then we can try to put that into our model. And I think, if anything, that's where you've had that gap between expectations versus the reality on the ground. And to some extent, you announced a big policy shift, perhaps because you had that week-long holiday period. It allowed an investor narrative to take hold that obviously they see what we want and they will give us what we want. And then when they come back from that holiday, you're left with, is that all there is? Yeah. And that led to a Saturday morning, Friday night press conference trying to detail, we have more, and we're left with, well, is that all there is, volume 2? And sometimes really the sequel is better than the original, so you're left with, give us a little greater clarity. And I don't think that the CCP wants to be, if you will, bullied by a market into providing something that is ideologically a little bit at variance with what their plans are.
So what do you do? Because there had been this hope that it gets rid of TINA, that there is an alternative to U.S. equities, that not only Chinese stocks, but maybe EM, maybe Europe-related ones. Is that dream alive at all for you?
As a U.S. equity portfolio manager, I'd rather there be fewer alternatives.
Fair enough.
But the realistic issue is, the U.S. market is not a cheap stock market. International markets are cheaper on a relative, if not absolute basis. And where I think investors can get their sense of clarity around where the world might be evolving towards, you're going to see flows ultimately follow those expectations. Can we get to a situation where people get everything they want from the governments they want? Just as I was taking the car in this morning, we're listening to the Barclays CEO talking about what he's hoping to accomplish under greater clarity under a UK system, or hoping to get greater clarity out of the UK government in terms of what's going on. That's a market that's been moving higher over the last several months, certainly, having gotten some clarity after its election and a realization of the government has the supermajority to do what it wants. So I think investors are constantly looking for what's the next big thing. I just think that the current big thing in the United States is still pretty attractive over an 18 to 24-month period of time.
The current big thing being literally big things, large cap stocks?
Well, large cap stocks have actually, we've gone from almost the magnificent 7 to the meh 7, if you will, with two terrific 2 within that. Because if you look within where you've got momentum, semiconductor software have moved more to the middle of a market. A market which is up 20% on the year, made its 45th all-time high. Basically, we're averaging one a week. Things are pretty good, but I think you're starting to see some broadening out. You're seeing people looking into bigger ticket consumer purchases. Some names leverage the capital spending, the second derivative, if you will, of the AI trade. Not that the first derivative has been bad in any stretch of the imagination, but investors are looking for what can you do for me next, not what you did for me from January to May.
But you did mention that valuations are still high, and I know one of your outlooks is that the next 12 months forward, it's going to be single-digit gains, which contrasts with this year that's shaping up to be at least 20%. Is that just based on valuations?
Yes, I mean, there's just constant battle between the earnings story and the valuation story. I think the earnings story remains attractive. Even with a slowing economy, we're slowing down into sort of a 2% trend, 2 and change trend growth, a 2 and change inflation outlook, mid-single digits effectively. That's the raw materials. You add some operating leverage, some financial leverage, you turn that into high single, low double digit sorts of earnings. But over the past month, the 10-year Treasury has gone from 3.6% to 4.1%. That starts, making bonds potentially an interesting story to have, painful as this is, again, for me to say and admit. But against that, it's hard to tell a story where stocks go from 20-something multiples to high 20-something multiples. At some point, you're saying we've embedded tremendous expectations. And again, if our lesson is trying to manage expectations, and we saw that with the financials. Yeah. What did you make of the financials? Because going into it, there had been that Barclays conference where you get the warning from Allied Financials on delinquencies, specifically auto delinquencies. You had JP Morgan resetting expectations. JP Morgan and Wells Fargo both noted a really healthy consumer, even setting aside credit provisions. From what you've heard so far, is the banking sector healthy? And what does it say about the overall consumer and state of the economy in the U.S.? Friday was a great example of what can happen when you let people sit in fear for a period of time. So we come back from summer vacation, you had that Barclays conference, you had some other updates where you pointed to things are maybe not perfect, and you are seeing some deterioration at the margin. And then we wind up getting through the totality of the data rather than single data points around a single portion of, what was interesting with the auto data is autos went through the global financial crisis with pristine credit, where housing was the problem. So I think to some extent, problems in autos are not supposed to happen. The idea you have to keep your car to get to work, so you're going to maintain that access to that credit is your most important. So when that seems like people are getting a little bit laxer in their payments, like what's going on there? And then you get no other information as companies go into their quiet period, you stew. So it's almost like watching a horror movie. You know something bad is happening, and the question is it going to be Hitchcockian and mentally terrifying, or is it going to be a splatterfest? And ultimately, we got neither. We got splatterfest or birds, essentially. Well, I was thinking Psycho, but either way. That works. More violent than birds, I assume. But the auto delinquencies, we got way off topic there. Back to auto delinquencies. I mean, it's not like that they have improved. The macro data is still one of weaker. I mean, what do you do with that? Of retail sales, we're going to get them this week, but for the most part have been otherwise healthy. But this one quarter that, as you point out, is odd for where we are in a cycle. Well, I think we have this constant interplay between what's happening and what we think is going to happen. And at the same time, we've seen, again, the 10-year, a measure of fear and greed, if you will, go from 3.6% to 4.1%. You've also seen economic surprises move notably higher in the United States. So yes, the data is slower, but the data is actually slowing at a slower pace than we were fearful of. So we've taken the fear of the hard landing that we dominated the narrative very early this year off the table. Then it became the soft landing. And now it almost seems as though maybe there's no landing. When we think about the revisions to, by the way, all that data we told you things were smaller, actually they're much bigger. The employment picture got better. Thursday's jobs report, a little messier, and we're left with what of that is hurricane, what of that is cleanup, what of that is port strike. So we have noise in the data, but ultimately we have this, and where I think economic data matters, we get that daily. We get earnings once a quarter, and then we only get 4 of those a year. But we wind up getting economic data, which either increases or decreases our confidence in what that single point estimate is that a specific bank is going to report at 6 o'clock on a Friday or for whomever has the good misfortune of reporting today at 6:05.
It's
obviating and blowing out anything I say, the relevance.
I think you might be safer there. I think the next big bank is tomorrow with Bank of America, so I think you might get a break in that, Jack. Jack, really wonderful to have you on. Everything from economics to Hitchcock. Expect nothing less of you. Jack Caffrey of JP Morgan Asset Management. Thank you again. You're watching Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
You're watching Bloomberg Brief. Danny Berger here in New York. It is only 22 days until the U.S. election. Of course, one of the big topics, geopolitics in Israel. The Biden administration is sending an advanced missile defense system, including associated troops, to Israel. In response, Iran's foreign minister says Tehran has no red lines in defending itself from threats, and that the U.S. is putting lives of its troops at risk. For more, let's bring in Bloomberg's Michael Shepard on this. Mike, again, what sort of is the take on this, on the latest, on a time in the campaign where geopolitics has been front and center, and you have the Biden sending more troops after already sending ships and other equipment to Israel?
Well, we have to look at the context in the region. Right now, we are awaiting Israel's response to the early October attack by Iran, a 200-missile volley against Israeli territory that Prime Minister Benjamin Netanyahu is still vowing to retaliate for. And what the U.S. is trying to do is shore up Israel's defenses against perhaps another similar onslaught of missiles coming from Iran, but also from Hezbollah, which has its own extensive missile batteries and capabilities in Lebanon that are pointed at northern Israel. So, and this is adding to U.S. forces that are already in the region and have been supporting Israel. During that attack that Iran waged that I just mentioned, U.S. forces, naval vessels, managed to contribute to defending against that missile onslaught and knock down some of the missiles coming from the direction of Iran.
Mike, closer to home, it's the run-up to the election, 22 days away. Kamala Harris, Tim Walz spending their time in swing states. How does it make sense in terms of what kind of demographics the candidates are focusing on when you have that being the tact of the vice president and Walz, and then you have Trump not going to just swing states, but places like California, Colorado, New York City, places that are Democratic strongholds?
Well, let's break it down a little bit. We can talk about the vice president's strategy first. She is really aiming this week at the so-called blue wall of traditional heartland industrial states in the north, the Midwest and Pennsylvania. These are places that the Democrats have said all along that they need to win and really dominate in to ensure that Kamala Harris wins the presidency in November. She will be going there, though, not just looking at the states broadly, but at a very specific constituency that has become one of increasing concern for Democratic leaders, and that is black voters. A New York Times poll over the weekend showed that support for Harris had softened compared to the last two presidential elections. And we saw the head of the Congressional Black Caucus, James Clyburn, say over the weekend as well that he was worried that some black men may either stay at home on Election Day or even cast their ballots for Donald Trump. So the vice president is making these appeals in person, and she also unveiled a new proposal this morning aimed at supporting black entrepreneurs with loans that are forgivable up to $20,000 and other programs that are aimed at enticing black voters on economic grounds as well.
Mike, we're also still grappling with the aftermath of both storms Helene and Milton. Do we understand how things look on the ground? And of course, there's devastation there, but also how it impacts voting in November.
Well, it's a great question, Danny, because especially in some of these hard-hit regions, such as western North Carolina and in Georgia as well, the logistics there are really precarious. Transportation is still very difficult. Telecommunications are still very shaky, and it will take a long time, well past the election, to get all of those things shored up. Local officials are trying to make as many accommodations as they can so that people can get out and vote and have their ballots counted. But there is a lot of push-pull between the parties and local authorities about exactly what can be permitted. And right now, officials and even the campaigns themselves are just focusing on the emergency and relief and response efforts. We saw President Joe Biden visiting Florida yesterday, promising another $612 million in aid, and also imploring lawmakers to return to Washington early to hold a session so that they could approve additional aid. For now, House Speaker Mike Johnson says no such special session is really necessary, so we will have to see what comes in the form of lasting aid. For example, the bill from Milton alone will be northward of $50 billion, President Joe Biden said last week, and we could expect the cost from Hurricane Helene, which devastated those regions in Appalachia, to be even higher.
Hey, Mike, we really appreciate it. That is Bloomberg's Michael Shepard giving us the latest on D.C. Tomorrow, a really important conversation. Join the Bloomberg editor-in-chief, John Micklethwaite, who will be speaking with Donald Trump. That will be live at noon Eastern. Now, on to corporates. Boeing this morning announcing a 10% job cut over the weekend. That's to around 17,000 workers. A strike still ongoing. Shares lower in the pre-market trade. Let's get over to Bloomberg's Benedict Campbell. Benny, just how dire of a situation is it for Boeing where they're resorting to job cuts at this moment with a strike still ongoing?
Good morning. Yeah, it's a pretty risky strategy that you're sort of throwing these 17,000 job cuts, 10%, into the middle of an already messy strike. Obviously not something that is looked upon favorably by the unions and the workers. They see this as a threat. Boeing basically trying to some degree, negotiate in public here, saying we might not need all these people who are striking, and business is such that we have to make some tough decisions. We don't know at this point exactly where the hammer will fall. We don't know who will get cut. The company did say on Friday that management, executives, and workers will equally be affected. So there's a sort of a sense of solidarity and sort of common purpose in this. But at the same time, we don't know how much it'll cost. We don't know how long it'll take. So the sort of financials tied into these measures, that's the part that remains unclear. Boeing is due to report earnings on the 23rd of October, so middle of next week, and hopefully we'll find out a little bit more then. But for the time being, the stock is down a bit. People are still sort of digesting what came out late on Friday.
All right, Benny, thank you so much. That is Bloomberg's Benedict Campbell. We have some breaking news for you. The Nobel Prize in Economics has just been awarded. It is being awarded to 3 individuals. That is Darren Acemoglu, Simon Johnson, and James Robinson. They're awarded the Nobel Prize in Economics for research on how institutions are formed and how that affects prosperity. The 3 economists get to share a prize of 11 million krona. That's about $1.1 million. Again, that announcement being made this morning, just moments ago. Last year, it was Claudia Golan who won for her research into the gender pay gap. So again, these 3 researchers on for how institutions are formed and how they affect prosperity. Okay, coming up, we're going to set you up for your week. We got some earnings ahead, big banks, big tech, all of that. We'll break it down for you on your brief.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
It's your Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading week on this Monday. Bond markets are closed today. Futures are still trading. That is for Columbus Day. Bank earnings are going to continue. Goldman Sachs, Bank of America, and Citi, they will all be reporting tomorrow. We're also going to get more earnings. TSMC and Netflix, those out on Thursday. So we're going to get the big cap tech stocks reporting too. Oil, meanwhile, let's get a check on that. Lower this morning by more than 2%. This comes after the weekend. China had its Ministry of Finance meeting. Maybe some disappointment, maybe also baked into here the fact you didn't get any sort of response from Israel. But oil down nearly 3% for NYMEX crude. Okay, that's it for your brief. Surveillance, that up ahead.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
We do think we're still in a good is good environment.
The more important thing for risk assets is not whether rates are going up or down. It's what's the broader economic and earnings backdrop.
Maybe there's this narrowness creeping back into the market.
The market is sort of punishing the more expensive stocks for the higher rates.
I think we're in a bull market, and peak inflation, peak tightening, peak rates should be good for equities.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, and your bull market is celebrating its second anniversary. Where did that go? 2 years since the ding-dong lows of October 2022, a move of more than 60% on the S&P 500. Equity futures, your scores to kick off the trading week look like this. We're positive by 0.1% on the S&P. On the NASDAQ 100, we are up by 0.2 on the Russell. We're up by 0.2% as well. We're still counting on the S&P 500, the 45th record high of the year. And the longest weekly winning streak on the S&P 500 going back to May. We've had 5 of them. Let's see if we can add some weight to that rally. The week ahead looks a little something like this. The highlight of the week for the earnings. Bank of America, Citi, Goldman for the data. US retail sales on Thursday, and for the central banks on the same day. Bramo, an ECB rate decision just around the corner.
It just sort of underscores how much in the US we're talking about that Goldilocks soft landing kind of moment, whether we see it edified by the earnings that you're talking about, really key. It shows how different it is over in Europe, where suddenly there is a new question around whether they're going to be fighting deflation, outright deflation that is imported from China, and just what they're facing in general, how much they have to counter a return to the norm that was pre-pandemic.
Let's talk about the latest out of China. The CSI 300 in Monday's session closing high by close to 2%. Really volatile session. SocGen framed it as follows. China stimulus locked and loaded, almost. The emphasis on almost this morning.
There are a couple of questions. The headline figure, but also the emphasis, because there is a lot of emphasis on supporting things like home prices, which is something that they said they weren't going to do. They talked about how a lot of the bond offerings that they could put out there could go to financing fiscal stimulus. What I gather was Deutsche Bank and Goldman Sachs both raised their GDP forecast to 4.9% from 4.7%. But there is no longer lasting kind of confidence this is going to generate real growth, especially as there is deflation in PPI and you're seeing declines, disappointing figures coming out of their export numbers.
Well, let's take the forecast. You mentioned Goldman and Deutsche Bank, 4.9. Just south of 5%. 5% is the target. This feels like over the last week, the effort's really about putting a floor under growth. And clearly many people are convinced by that. The next step, what this market's hoping for, and to put the emphasis on markets and what traders are hoping for, is a whole lot more than that.
Well, that's the reason why it's not just a question of staving the losses or staving the pain. It's a question of what more can you do. And building bridges to nowhere and supporting house valuations isn't going to do it. So that raises a question of what is next in terms of fiscal stimulus. They have pledged to do things. They have said the right words. They haven't given headline numbers. They haven't given programs. And that's the reason why people are saying we're still wanting. At the same time, it starts to raise this question, how much is politically driven ahead of both what's going on in the U.S. with the election cycle, but also some of the tariffs coming out of Europe at a time where there's a really strong competition and a feeling that something's got to change with China's reliance on exports.
A lot to work through this morning. Let's start with the day ahead, the hour ahead. Coming up on this program, we'll catch up with Laurie Calvasina of RBC as the S&P 500 posts its 45th record high of the year. Sigrid de Vrij of ACEA as the Paris Motor Show kicks off, and Johanna Chua of Citi as China promises more fiscal support. We begin this hour with stocks sitting at fresh all-time highs following a solid start to big bank earnings. Laurie Calvasina of RBC writing, globally, our analysts have a slightly bullish tilt in their outlook for performance over the next 6 to 12 months. Within the US, performance outlooks on financials are most bullish, followed by materials and healthcare. Laurie's with us around the table. Laurie, good morning to you.
Thanks for having me.
Good to kick off the trading week with you. One of the big sectors that comes up repeatedly around this program, the financials. Yep. People seem to like the financials. Earnings season has started. You, like me, like us, we look at the banks as some kind of read on the broader economy. Yep. What's it telling you right now?
So I thought the results we got on Friday affirmed the soft landing thesis. I mean, that's really all I was paying attention to be honest, when we were going through the transcript. And I think, we sort of heard, on the one hand, the consumer is still pretty strong. We had one bank tell us, we're eagerly looking for those signs of weakness and we're just not finding them. And I think that, really reflects what a lot of us macro forecasters have been telling our own clients lately. Like, we're looking at it, we hear all the concerns, we are just not seeing it in the data, we are just not hearing it from the companies.
Which presents its own problem. You look at high yield spreads, super tight. Investment grade spreads, super tight. The banks are saying, nothing to see here, no problem. So as an investor, if you've been sat in cash, you're looking at stocks at all-time highs, credit spreads at very, very tight levels, and you're wondering, what on earth do I do? What do I do?
I think it's a question of your time horizons, right? And if I think about my own targeting process, we're a little bit over my 5,700 number right now for this year, and I feel pretty neutral in the short term. I don't feel bearish by any stretch, but valuations feel full. Sentiment feels pretty full to me. AAII hit, I think it was 24% on the 4-week average last week, 28% on the 1-week number. That's a 1 standard deviation event. So I don't necessarily feel like you need to be chasing at this particular moment. That being said, when I walk through the valuation math for next year, if I keep a pretty steady multiple and I just bake in earnings growth, assume a pretty good economy, I can get to 6,200 easily. On my, I have a below consensus earnings number of 269 now. If I use consensus earnings, which is over 280, I can get you to like 6,500, 6,600. So I think you buy dips is the way to think about it. And I think if you don't really care about the short term, sure, maybe you can go ahead and hold your nose and buy.
There is a question about which dips do you buy, because there has been a very segmented market where you have basically big tech rotating in and out of favor, and then you have the rest of the 493 that are playing catch up in fits and starts. How much do you lean into this sort of rotation, this broadening out trade at a time where you do see some earnings growth, but it's patchy?
So look, I think if you're thinking about the rest of the S&P 500 x the Mag 7, I feel much better about that right now than necessarily small caps. But I do think the earnings need to come through. And we're in just sort of this weird earnings growth environment right now for the bits and pieces. And I think that's why the leadership handoff has been such, fits and starts. So Mag 7 earnings growth is decelerating on forward estimates. However, those estimates have been improving recently. If you look at the rest of the market, those estimates have been stagnating. So, on the one hand, we've got this decelerating earnings growth environment for this previously hot part of the market, and that makes everything very jittery, right? It makes us vulnerable to downside. But it's fighting back very hard. I need the other side of the market, the financials, the energy companies. We need them to fight back harder this reporting season.
One thing that struck me about the earnings that we heard, in particular from JP Morgan, but also from Wells Fargo, is just the lack of clarity, the lack of visibility. And I'm guessing we're going to hear that more from other companies. We have already. How difficult does that make your job?
It makes it very difficult. And on the one, I was talking to someone about corporate confidence over the weekend, and I said, on the one hand, there's this resilience, the faith in the ability to execute and control what you can control. On the other hand, we are seeing companies talk time and time again about uncertainty from things, about the path of interest rates. Well, we thought we settled that, maybe not. Let's see. We've got the election coming up, and I asked a company this recently at one of our conferences, and I said, what are people waiting for, with this election? What outcome do they want? What policy issues are they focused on? And eventually the company said, well, I think they just want the event to pass. So, our customers know what they're dealing with. And I think that, for better or worse, is where we are. And we heard one of the banks actually allude to that idea on Friday as well.
Can we stay on that theme? Do you sense a real sense of paralysis, that people are really holding back, just waiting for this event to clear?
So if I think about the hedge funds, I don't get the impression they have been doing a lot. They may be starting to do more now that we're within a 30-day window. You are seeing the VIX move up a little bit. That indicates to me that maybe the fast money crowd is starting to do a bit more. If I think about my long-only clients, I had one person say to me recently, said, I don't know what's going to happen on the election, on election. I don't know what the outcome is going to be. How can I possibly do anything right now? And so I do, on that kind of longer-term money, I do see, I don't know if I call it paralysis, but I see healthy wait and see.
And whether we actually get an outcome. I say waiting for this event to clear. I've got no idea how long it takes for this event to clear. It could be weeks.
Well, I think it's the election outcome itself. Are we going to go and fight it in the court system the way we did back in 2000? Now, what's interesting about 2000 is we did not get our typical sell-off heading into the election. We also didn't get our typical pop after the election. And I think we actually resolved that pretty early on in December, and the market still never got, that sort of relief bounce. So that's something to watch in here as well. But let's even take it a step further. The legislative process is how laws are determined. I feel like I keep having to remind people this who don't sit in the U.S. It's not so much, if Anne-Marie were here, right, this laundry list, this, that they're all throwing out. These are just negotiating points and ideas. We have to actually see what Congress is going to look like. We have to see which of this laundry list they actually care most about. And, if they're going to pick and choose a couple of things, what are those things going to be? So we're going to be waiting and seeing for a while.
The paralysis that you're talking about implies almost binary outcomes or potentially very different outcomes between one candidate and another, or between one legislative outcome or another. How different are the ranges of outcomes that people are trying to map out in the C-suite?
So, it's funny. I probably have a slightly different view on this. I only look at policy. I don't look at personality. And we've gone through and just really tried to compare all the campaign documents, not what they're saying in every single rally, but what's actually been put on websites, what's been put on papers, what's been said on dedicated economic speeches. And I do feel like there are some clear differences on things like corporate tax policy, things like energy policy. But tariffs, I feel like, as opposed to them being, left and right, it's sort of on one side of the spectrum, with different extremes. I do feel like I'm not seeing either candidate necessarily talk a lot about in what I call sort of industrial-related stimulus, which was a big feature of the last two campaigns, sort of reinvesting in infrastructure and things like that. I'm seeing a lot of consumer-led initiatives. So I feel like, we're kind of ending up on the same page on a lot of things. Like, they're both talking about things like home building.
What strikes me is when we talk about what the big fears are of people, they talk about geopolitics, they talk about the unknown around the potential outcome of the election, they talk about interest rates. And then you look at things like the AAII investor survey, and there's an incredible amount of confidence. You take a look at what they're buying, there's an incredible amount of confidence. Where is this paralysis showing up? If the consumer is still spending and companies are reporting good earnings, where is it showing up?
I think part of it is maybe coming from overseas. And one of the things I've noticed is that Russell 2000 futures positioning on the CFTC data has suddenly just surged, right? And that's when that tends to happen when people want to make domestic bets on the U.S. It's moving up in a similar fashion to what we saw in 2016 on the Trump win, if you looked at 2017 on tax reform, if you looked at 2018 on the trade war. So those were mostly domestic U.S. trades. My colleague Elsa Linos told me recently that she's seen sort of a similar kind of sudden upward move in dollar positioning. So I feel like maybe we're starting to get some U.S. bets that are being made again.
Just a subtle shift towards the former president, Donald Trump?
It's hard to say. I mean, we've looked at how S&P 500 is trading in regards to Trump in the betting markets. From 2023 through the middle of 2024, it was a very tight, powerful correlation. It broke down the last couple months, and I think we have to watch right now with the betting market starting to shift. You're not really seeing the national polling averages shift yet. I think they probably will. But we have to see if markets are recoupling with Trump. It's not clear yet.
Things are still super tight. Laurie, it's good to see you.
Good to see you
Laurie
too.
Calvasina of RBC. With the phrase of the year, I think, regarding the election, staring at the sun. I think for all of us, it's been like staring at the sun. Let's give an update on stories elsewhere this morning. It's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. 4 Israeli soldiers were killed and dozens more were injured after a drone struck a military base in northern Israel. The attack marks one of the deadliest strikes from Hezbollah in at least a year. Shortly afterward, Israeli strikes on southern and central Lebanon killed at least 51 people. That, according to local health officials, it's one of the deadliest single days for the country in recent weeks. The UK International Investment Summit is underway in London. The Labour government is looking to draw leaders of tech, PE, and finance. Among G7 nations, the UK has lagged peers in foreign direct investment since the pandemic. Bloomberg's Stephanie Flanders will be sitting down with the UK Prime Minister Keir Starmer at 9:30 a.m. Eastern. And SpaceX has pulled off an incredible technological feat on Sunday after launching its Starship rocket into orbit. The company achieved its first ever chopsticks landing, catching the rocket over 200-foot fall booster out of the air with giant mechanical arms at the launch site. The recovery marked a historic milestone for spaceflight, with the reusability of the rocket booster seen as a critical step towards developing more advanced space travel. SpaceX expects full reusability to drastically lower the cost of launching future Starship missions. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes. Just absolutely phenomenal. Congratulations to Elon Musk and the team over at SpaceX. You know when something looks unreal and it looks like a video on rewind? That's what that looked like. It just doesn't look real.
Exactly. It looked like my child's project when they say, like, this is what I seem to do, and they Photoshop something in, and then they hand it to their kid, their teacher. I mean, honestly, it looked like one of those games where you throw up a ball and catch it in a little wand. I mean, it's just sort of shocking.
This country's capable of some amazing things. Up next on the program, the election race continues to tighten.
By the way, we're leading in all the polls, but we have to win. Too big to rig.
We are nearing the home stretch. We are nearing the home stretch.
That conversation up next, live from New York City this morning. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Equity futures on the S&P 500 firmer here by 0.2%. The Treasury market closed today for Columbus Day, so you're not going to see cash treasuries. But you will see a lot of things happening elsewhere. Commodities down by close to 3% on WTI. Likewise on Brent. Various reports about various targets for Israel in Iran. But ultimately, still another weekend, Bramo, has passed and no action, still waiting for retaliation.
There has been no action. However, there was a pretty big action from the United States in terms of shipping an anti-missile type of protective device to Israel, which indicates that maybe they're preparing for some sort of action that could prompt some retaliation, and they're girding for that.
Brent crude down by 2.6%, 76.98 on Brent this morning. Under surveillance this morning, the election race continues to tighten.
By the way, we're leading in all the polls, but we have to win. Too big to rig. We're leading in the polls, but we have to do it too big to rig. Because they are good at one thing. You know what that one thing is? Here goes cheating. That's they're professional thieves.
We have 23 days until Election Day. And we are nearing the home stretch. We are nearing the home stretch.
So here's the latest new polling showing Donald Trump closing the gap with Kamala Harris with just over 3 weeks remaining until Election Day. As pressure builds, tensions reportedly rising between Team Harris and Team Biden. Axios reporting some on the Harris team say that top White House aides aren't sufficiently coordinating Biden's messaging and schedule to align with what's best for the vice president's campaign. Joining us now from the nation's capital, Bloomberg's Michael Shepard. Shep, can we start with that story? What did you make of that Axios story over the weekend?
Well, there's no question, Jonathan, that there are still a lot of bruised feelings between the two camps. The Biden camp, namely, in particular, foreseeing the president that they've worked for so many years, pushed out of the race, in essence, following his disastrous debate performance in June, that casts questions about his mental acuity and fitness for office and whether he'd be able to defeat Trump. Now, on the other hand, for the Harris camp, they feel that the president, in trying to hold on to the nomination, had suggested that he and only he was capable of beating Trump, and therefore she was not able to. Now, we do see in the polls that she maintains this slight lead, but it is shrinking according to some of these surveys, including the key swing states that we've been watching very closely. So these tensions that we're seeing play out kind of indicate just where we are in the race and just what a fraught moment it is. It also, for me, recalls what we saw during the Clinton-Gore campaign in 2000, where he asked then President Clinton to not campaign in swing states out of concern that he might actually undermine the candidate, Al Gore.
Shep, I think we need to get into what this is all about. When they talk about complaints about the schedule, reminds me of last week when we had the vice president on The View and the sitting president was conducting a news conference regarding the hurricanes. Now, one is certainly far more important than the other. And the vice president was trying to make out that Governor DeSantis wasn't taking her calls for partisan reasons. At the same time, the president was saying that they had a good relationship, that they were getting everything they need from one side and the other side was getting everything they need from them. Is that what this is really all about, the last week, or is it more than that?
There is a little bit of concern, and there's always a tension between the president and their number two about who is stepping on whom. The president is the one who is running the country, leading the ticket, and the voice for the White House. So it is always an awkward relationship for the president to have their vice president out on the campaign trail and therefore taking the center stage role in politics for the party.
You did mention, Mike, that a lot of this has to do with where we are in the election cycle, and you can definitely feel a nervousness percolating up in the Democratic Party. We're speaking with Isaac Botansky of BTIG later in a couple hours, and he said he still thinks right now that Donald Trump has the advantage because of two particular issues, the economy and immigration and border security. So how much are those two issues really dominating a lot of the discussion as the sort of twilight of the campaign trail commences?
Well, the economy has remained an issue that has worked to Donald Trump's advantage in this campaign, although Kamala Harris has managed to close the gap on that in recent polling. Our own Bloomberg News Morning Consult poll of the 7 swing states that we have surveyed shows that she has been closing that gap and showing more ability to connect with voters on the issues of the economy and in ways that signals that she cares about where they are. Some of her plans, including tax cuts, her offer of housing assistance nationwide, have resonated with some voters, allowing her to make up some ground that Biden had lost to Trump in the polling when it came to the economy. And immigration, of course, is a signature issue for the former president. It helped get him elected in 2016, and we saw on Friday and Saturday and Sunday how he returned to it again and again and again, really trying to conjure up once more those vibes about how he would, with strong border policies, try to save the nation from what he sees as a moment of peril.
Shep, I want to circle back to the clip that we saw at the very beginning where Donald Trump was talking about how the other side likes to cheat and that everybody needs to get out to vote. In an interview with Maria Bartiromo over the weekend, he talked about how the bigger problem is the enemy within. He said, we have some very bad people. We have some sick people, radical left lunatics going on saying it should be handled very easily, if necessary, by the National Guard or by the military. What's been the reaction to those comments?
Well, the reaction has been that once again we see the former president raising these claims without offering any evidence. And on immigration, for instance, he did the same thing on Friday in Aurora, Colorado, saying outright that the city had been overrun by immigrant gangs when local authorities said that was completely not true, and that any issues that they had with gangs were confined to one local apartment complex and did not reflect the state of safety in the city overall. So he offered this suggestion, hint that there could be violence on Election Day without providing evidence, and also glossing over the fact that the violence that occurred in 2021 following the 2020 election was largely perpetrated by his own supporters on January 6th here in Washington.
Shep, with that in mind, as we enter the final days, where do you expect to be the biggest push from either campaign?
Well, right now we're seeing this week the Democratic ticket, Kamala Harris and Tim Walz, pushing in the blue wall states of the industrial north, Pennsylvania, Michigan, Wisconsin. They are trying to make inroads there with voters, but particularly with black voters. And they are concerned that the support among African Americans may be softening. This is a Democratic constituency that's been reliable over the years, but a New York Times poll released over the weekend indicated that as many as 15% of likely voters could be, black voters, could be tilting toward Trump. And that is an increase in the Republicans' favor of more than 6 percentage points. So they are worried about this. So a number of the events that they have scheduled in these so-called blue wall industrial states are geared to gin up enthusiasm among black voters to ensure not only that they agree to vote for Harris, but actually turn out on Election Day to ensure that if the election is close, they have enough votes to pull it out in each of those states.
Shep, do you think some of those men approve and appreciate being accused of misogyny instead of addressing the policy differences that some of those men might feel?
And I think you're referring to the comments that former President Barack Obama made in trying to shore up support for Kamala Harris, where he was pointedly speaking to black men, trying to say, guys, we need to be on Kamala's side. If you have any misgivings about electing a black woman as president, please set those aside. But some of his comments seem to not have gone down quite as well. So Kamala Harris may have a little bit of cleanup work to do at each of these events, trying to ensure that she is there for black male voters as well.
Shep, it's good to hear from you, sir. Down in Washington, D.C., Michael Shepard with the latest. It felt like a tricky road to start going down. The former president started going down it, and inevitably there's blowback ever since in the days after.
One thing that Kamala Harris has tried to do is not make this about the fact that she's a woman, and that she doesn't want to make it about identity politics. And so this kind of brought it right into the fore. Did you see Michael Che on Saturday Night Live, what he said?
I don't watch SNL.
You don't watch?
No.
Okay. Well, he basically said 78%, don't blame us. He said that you can't blame us for any lackluster support. Look, I think that this is going to be something where each candidate is parsing every single vote. And so you're going to have some very confusing messages coming out as each of those votes try to be sort of round in.
A few more weeks to go. Up next on this program, Sigrid de Vrij of the ACEA, joining us from the Paris Motor Show as European automakers face what many consider to be the perfect storm. Equity futures on the S&P up by 0.2 from New York. Good morning.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Five weeks of gains on both the S&P 500 and on the Nasdaq 100 as well. The longest weekly winning streak going back to May of this year. Equity futures on the S&P 500 adding a little bit of weight to the rally, up by 0.2% on the Nasdaq 100, up by about 1/3% on a Russell to small caps, up by 1/4. If you switch up the board and get to foreign exchange, last week the dollar index, DXY, posting a second consecutive week of strength. We have not done that since the end of June. It's been that long. The euro's negative again. We're down 0.1%. Pound sterling off by 0.1 as well, with the dollar stronger against the bulk of G10. For the euro, it's going to be about the ECB decision on Thursday. For pound sterling, we're counting you down to a big budget taking place later this month. Look out for this conversation later, in about 3 hours' time. The Prime Minister, Keir Starmer, sitting down with Bloomberg's Stephanie Flanders, and we need to work out, if he's so committed to growth, how is he going to engineer it?
He's talked a lot about pain. He's talked a lot about cutting back. He's talked about the potential for everybody to accepting that, to be accepting that. If that's the case, where is the growth going to come from? And where is he going to really attract business back to a country while also raising taxes and creating some more punitive levies? These are some of the questions that I'm very curious to hear the answers to.
It's a big couple of weeks for the British economy. Look out for that. There are two currency pairs to look forward to for the rest of this week. Let's turn to crude, to WTI and to Brent as well. We're pulling back by a little more than 2%. Brent crude is 77.20. WTI down to 73.68. Some NBC reporting over the weekend. The US officials believe Israel has narrowed down what they will target in their response to Iran's attack, with these officials described as Iranian military and energy infrastructure, but no final decision has been made. And this is a waiting game, and has been now for more than a week.
You know, I really enjoyed Halima Croft. She came out with a piece over the weekend where she was talking about essentially people will probably sell oil if there is some sort of Israeli strike that avoids the mass amounts of oil reserves that Iran has. But that's probably going to be a head fake in her mind, because she thinks this is just the beginning of a tit for tat and escalation. How this gets priced in is very difficult. The fact is that the commodity market tends to only buy or sell when there is some sort of catalyst. So expect a big move one way or another. Should we get a move that really surprises one way or another in terms of the oil?
It's super hard, because if they do strike energy infrastructure, are you just accounting for Iranian barrels that might be at risk, or are you thinking about the whole region being at risk? And they've got a very, very different oil market.
But that's exactly it, right? Escalation, the ultimate would be the Straits of Hormuz. And if they've essentially cut off all oil transport through one of the main sort of arteries of all of that transport, there's a lot unknown here. We do know that it's going to escalate at some point. And how do people trade around it? They wait until they have more clarity, and that didn't come over the weekend.
Crude a bit softer this morning, down by more than 2%, $77 and about 24 cents on Brent crude. Under surveillance this morning, Chinese stocks rebounding from their worst week since late July, with the CSI 300 index notching its biggest gain in nearly a week. Traders are waiting more details after the country's finance minister hinted at greater government borrowing to shore up the economy. But we didn't get a number, so we're still waiting, and you might have to wait a few more weeks.
We didn't get a number, but we also didn't get details. We didn't get a sense of exactly what they were going to support, other than some rhetoric that gave people confidence that a lot more was coming in terms of just how they were going to finance it. But to me, I really want to understand, how are they going to support growth? It's one thing to say they're not going to miss their target by as much. It's another thing to say we're actually laying the groundwork for consumers to have more confidence to go out there and spend, because what we're seeing right now is steady deflation, and that has not abated.
So one step at a time, local governments, local authorities have not been able to sell land. And that's been a big source of revenue for a long, long time. So property developers and what happens with local governments has been a big theme at the local level. What they established over the weekend was just a mechanism to tackle that problem. That's the first step. The second step, what we're all waiting for, what this market is hungry for, is not just putting a floor under growth. It's providing incentives for consumption. We're going to have to wait. The Chinese finance minister over the weekend said the central government still has quite large room to borrow and increase the deficit. That's putting a floor under things. I think after that, that's the next step, the next 2, 3, 4, 5 steps down the road.
Especially since Xi Jinping's administration has been reluctant to really say we are going to give payments directly to consumers. They don't want to follow the American style of things. They think that there's a warning in some of the inflation that popped up after the pandemic. That said, they're fighting deflation. And this is why I think it's really interesting to see whether that is sort of the new norm and what that does to the European economy versus the U.S. economy that's a little bit more separated from what goes on in China.
Watch this space. More on this conversation in about 15 minutes' time on this program. Let's get you up to speed on Boeing, planning to cut its global workforce by about 10%, or roughly 17,000 positions. The CEO telling workers in a memo the cuts will include executives, managers, and employees. The company also announcing $5 billion in charges across its commercial airplanes and defense businesses. That's stocking down again this morning. We're lower by more than 2%.
Honestly, they can't catch a break. This is a company that just keeps getting worse and worse in terms of the outlook. There is a new CEO Does this give him carte blanche to make some hard decisions? Right now, usually job cuts leave stocks higher because that's reducing the overhead. In this case, it's not. And I take that from a message of how much do they need the expertise that a lot of these workers have, and how do they get out of a slump that ultimately comes not from overcapacity, but rather the opposite, and a lack of production, expertise, and frankly, skill.
Your observation's the important one. The stock's not high this morning. Not enough.
Yeah.
Far more needs to be done to put a floor under this company.
There needs to be something structural to give people confidence that there aren't going to keep being snafus, and that frankly the outlook isn't going to keep getting worse. And ultimately that has to come to production ramping up, some sort of resolution to some of the other probes so that we understand what the actual problem stemmed from, because we actually don't even know that at this point.
Speaking of bad outlooks, let's talk about Europe. Analysts in a Bloomberg poll saying Germany is suffering a mild recession and output across the whole of 2024 will be flat. Respondents seeing GDP shrinking 0.1% in the third quarter, following a surprise contraction of that magnitude in the second quarter. Looking ahead to the ECB, how can't they cut interest rates on Thursday? And if they don't, and we've said it on this program, if they don't, that news conference will be absolutely fascinating. How do you justify not?
Right now, the market's basically saying they will cut rates. My question is, how much more are they going to signal that they're going to cut rates? Because essentially, at a certain point, not only is the ECB trying to figure out how to perfectly land this economy, the economy has landed and then some. The inflation rate is below their target already, albeit only for a couple of months or a month. But a real question is, going forward, are they trying to land a soft landing? Or are they trying to avoid another bout of deflation that they saw pre-pandemic?
At the heart of all of this is the automakers, so let's talk about them. European automakers facing what many people consider to be a perfect storm. Rising costs, disappointing EV sales, and increasing regulation. Sigrid de Vries, the Director General of the European Automobile Manufacturers Association, joins us now from the Paris Motor Show. Sigrid, welcome to the program. We've had profit warnings from VW, from BMW, from Stellantis. Can you just start by telling us what is going wrong for European automakers?
Well, there's a lot of things going right. The vehicles are there. We have an ambitious trajectory towards decarbonization, but demand is lagging. So, and that's what we're witnessing today in Europe, also elsewhere in the world. Consumers need a bit more time to really be ready for this enormous transformation to electrification, and that's what we're seeing. This is not a straightforward transformation. There are obstacles to overcome, and that's also what we see here and now in Europe.
Sigrid, how important are lower cost electric vehicles to that transformation?
Sorry, can you say that again? How important are what?
Are lower cost, are cars that don't cost as much, that are electric vehicles that people can buy. How much is that essential to this transformation?
It is essential, but it's just one piece of the puzzle. People need to be able to use these vehicles. They need to be able to charge electricity at home, at work, along the road. They need cheap and green electricity to put into their vehicles. They need to change their mindset. This is a different way of using your mobility than they were used to. So price definitely is important, but it's certainly not the only part of the equation.
The reason why I ask this is because recently the EU decided to pass a 45% or up to a 45% tariff on in vehicles imported from China. There has been concerns that this will actually increase the cost of domestic vehicles being sold in the the EV space. How much is that a concern of yours, that that could set the transformation back?
No, I don't think that's a concern because prices need to go down. I think manufacturers started serving the more premium segments of the market, which they typically do with newer technology. So they need to make more models available also in the lower and mid-size price segments. And that's what they are doing, actually. We expect a lot of model launches. We've seen some last year, this year, and now next year also to come. So I don't think that's the predominant issue there.
Sigrid, we'll catch up with the Stellantis CEO in about an hour from now, and we've had a conversation with him about the overcapacity in Europe. We've crunched the numbers here at Bloomberg. If you look at the top five, the big five automakers in Europe, and I'm sure you're familiar with these figures, nearly 1/3 of major car plants are producing half the vehicles that they have the capacity to make. Are we at this point when they've got to make a decision to lay people off and cut capacity? Can they hold on with that capacity for much longer?
Well, it is indeed an issue. I mean, we're still more than 2 million vehicles below pre-pandemic levels. So there is overcapacity. That is an issue that needs to be addressed, and that's why it's so important to really note that this time around the market is lagging, demand is lagging. So we need to sell more of these vehicles, European, also from elsewhere, and that will help. But you need purchase incentives, you need charging infrastructure to make this transformation work. And I think so only with a concerted, a joint effort can we really get where we want to be and also take care of overcapacity issues.
It sounds like the burden then for now is on national governments, and they've got a big decision to make. Either they provide state aid, they roll out the infrastructure quicker, or these car companies as private organisations accountable to shareholders are going to have to cut capacity. Sigrid, do you think that national governments are aware of that? Have they had a sufficient reality check to make that decision anytime soon?
Well, I think indeed reality check is the name of the game. I mean, the policymakers really need to step up their game. As I said before, they've set targets without really a holistic plan to also accommodate the transformation. The vehicles are there. Vehicles are not the bottleneck, but now there needs to be a market stimulated, created. I mean, we're at the point where we're going from first movers, early adopters, to really mass market adoption of these electric vehicles, and that is not a straightforward trajectory. So policymakers need to step up their game, need to step in, and it's not just about state aid. I mean, it's really more about creating, stimulating that market, encouragement to get these vehicles on the roads. But indeed, it takes a concerted effort, and policymakers are on call.
What do you think auto manufacturers in Europe will have to do if there aren't purchase incentives or programs like that, as you were mentioning?
Well, I mean, they have several ways to meet their targets because in essence in Europe there's a sales target set for vehicle manufacturers. So they can pool with other manufacturers, they can pay penalties, they can cut production, or they lower their prices. Those are basically the four major compliance mechanisms to meet the targets set by the law here in Europe. So none of them are attractive, right? And a lot of the problem today is caused by a lagging demand. So manufacturers really need to use all these levers that they have, but it will deliver a disproportionate cost of compliance beyond beyond manufacturers doing, and that is why we are also here in Europe, as I say, are sounding this alarm bell so loudly. We need action now, and infrastructure build out will take too long. It's not an immediate effect. Purchase incentives might. You see also when they're taken away how the market again drops. So there's a number of measures that need to be taken, and we stand ready. My members stand ready to deliver, and you can see it here also in Paris at the show. But it's really urgent that we now get our act together.
Could sense that urgency. Thanks for your time this morning. We appreciate it. Sigrid de Vries there of ACEA. We'll catch up with the Stellantis CEO at 8:10 Eastern Time. Do not miss that conversation. Carlos Tavares just around the corner. Team here at Bloomberg's done a wonderful job of breaking down this data. I'll repeat that stat for you again. Nearly 1/3 of major passenger car plants from Europe's 5 largest automakers, so that's BMW, Mercedes, Stellantis, Renault and VW, were underutilized last year. That's a major problem, the overcapacity across the continent.
And just to put this into perspective about why this is so central to the European economy, the auto manufacturing industry in Europe employs some 13 million people. This is not a small figure and goes to the heart of the economic engine.
More on this story a little bit later this morning. Let's get you an update on stories elsewhere with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Darren Acemoglu, Simon Johnson, and James A. Robinson were awarded the Nobel Prize in Economics for research into how institutions are formed and affect prosperity. The 3 economists will share a $1.1 million award. Last year, Claudia Goldin received the award for her research into gender pay gaps. The year before that, it was Fed Chair Ben Bernanke who shared the award with Douglas Diamond and Philip Divig for research on banks and financial crisis. The Singapore government has blocked a proposed $1.7 billion deal by Allianz to buy a majority stake in homegrown firm Income Insurance. The government decided it wouldn't be in the best public interest for the deal to proceed in its current form. The city-state isn't satisfied that Income can fulfill its social mission as a cooperative after the acquisition. The approval of any revised deal lies with the country's financial regulator. And as you guys were talking about, cracks have already appeared in the Eurozone's labor market after years of unexpected resilience, pressuring the ECB to lower rates. Some major companies have begun offloading staff, sparking fear of a sudden deterioration that could further rattle the region. Economists at Goldman Sachs predict that the euro area unemployment rate will rise to 6.7% over the next several quarters. And that's your brief. John.
Hey, Danny, thank you. I think the question around the Governing Council of the ECB has changed. It's not about why should we cut interest rates. Why shouldn't we cut interest rates, given the backdrop in Europe right now?
And how far should we cut them? This really goes to the heart of what I think is sort of this curiosity of the dollar weakness and how long the euro can remain strong, given the fact that people are talking about a potential neutral rate of 2.5% in the euro region at the highest end versus some 3.5% over in the U.S.
Euro dollar right now, 109.25, slightly weaker euro on the screen. Up next on the program, China, putting a floor under growth.
We've had a big stimulus on the fiscal side and monetary policy side. So we now expect GDP to grow 4.7% next year in China.
That conversation up next from New York. This is Bloomberg.
About artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Equity futures on the S&P up by 0.2% after posting the 45th all-time high of the year so far in the S&P 500 in Friday's session. We add just a little bit more weight to it. In the FX market, the euro 109.25, negative 0.1%, going into the ECB rate decision on Thursday. As we've said repeatedly through the morning, how can't they cut interest rates given the backdrop in Europe right now? And just to round things out, crude down by 2.3%, 73.76 on WTI. Under surveillance this morning, China putting a floor under growth.
We've had a big stimulus on the fiscal side and monetary policy side. So we now expect GDP to grow 4.7% next year in China. The demographics, the large debt, and deglobalization, and none of that will be changed and impacted by the fiscal package that has been announced.
So here's the latest this morning. Chinese stocks rebounding after the finance minister announced details to support the property sector, but stopped short of giving a headline number for fiscal stimulus. Joanna Choi of Citi writing, fiscal policy remains the key thing to watch in terms of timing. The next few days could still be a window for some guidance from the Ministry of Finance, while the MPC Standing Committee at the end of this month could be a window for action. Joanna joins us now for more. Joanna, good morning. It's good to see you.
Hi, good morning.
Welcome to New York City.
Yes,
Good timing to be here.
Yes.
Good timing to be here after the weekend. Let's just start from 35,000 feet, the highlights of the announcements that we got on Saturday. What were the big ones for you?
Look, I think the market obviously seems a bit confused and kind of divided in how to interpret the press conference, because I think people were looking for three main things. One is you were looking for kind of a headline numerical figure. Obviously, people outside were looking for that, and we didn't get that numerical figure. Second is people were looking for the details of the composition of fiscal support, and I think there's a lot of expectation and hope that there may be some more demand support for welfare and consumer spending, consumption support. And that, I think the composition was a little bit underwhelming, because we only really got a little bit on the student subsidies, and there was a lot more focus on local government and property support, which is important, but we were missing that demand support consumption angle. And then the third thing people were looking for was forward guidance. And I think this is where there is a bit of a difference, because on the first two, they kind of disappointed or underwhelmed, but I thought on the forward guidance actually was quite, positive and supportive. So the Minister of Finance gave a very decisive kind of statement that there was enough room on debt and deficit for the central government to kind of provide support. And I thought that the forward guidance in terms of local government debt support, including potentially the large, providing enough bond quota for the largest ever government debt swap, and the fact that they also talked about being able to use special bond quota to buy up unused, to buy up unsold housing and land, so that property and the use of the bond quota for property support was also, as a forward guidance, was also more positive. So on the three piece, the first two, the numerical, the composition and consumption kind of missing, but the forward guidance, I think that still has a little bit of more hope, more supportive stance. And that's where you get a bit of a divergence between like onshore markets seeing this as a little bit of a positive hope, and then offshore kind of being disappointed because they're focused on the first two factors.
Well, let's focus on the third factor. Let's talk about the guidance. Help me understand the difference between ability and willingness. What the Ministry of Finance did for me over the weekend was demonstrate an ability to act if they need to. Have you seen a sufficient demonstration of willingness to do more? And are you expecting that in the coming weeks?
So, I've always felt that it was always a willingness rather than ability. And the fact that they came out to express and emphasize that the Ministry of Finance, central government, has the ability was kind of reassuring. I thought the tone of the finance minister in that press conference was also kind of reassuring. Now, in terms of willingness, we're going to have to see further. I think obviously people are still very divided because we didn't have the numbers. So people were not really sure, and we were waiting still for the NPC, because obviously end of the month, that's when we're going to get further details. But the important thing is we also probably need to a little bit wait for the Central Economic Work Conference in December, and then for 2025, because if there's going to be a revision for the budget, as I said, they said there's a lot of room on the deficit and the debt. It wasn't really clear we're going to get a deficit revision for this year, but if they're going to do some revision on the deficit and debt next year, that obviously will be more supportive for 2025, and then the details will be at the NPC meeting in 2025. But we should get a little bit of early guidance on the Central Economic Work Conference, and like I said, at the end of the month, when we get the NPC meeting, we're going to get more guidance for this year. So we're not giving up on the possibility they'll still give some 2 trillion renminbi support. It's just not clear how much of it will be on budget, off budget, and then we're going to have to wait a little bit more for 2025 in terms of the support.
All that being said, there is sort of a deepening we're seeing of deflation. We saw exports coming in lighter than expected, so that part of the engine isn't really there. There's a question as people revise upward their growth expectations for China, it still is below what the target is. Have we gotten confidence that this administration has reprioritized the economy over certain national goals that they were basically prioritizing? That was the reason that they held off for so long on stimulus in the first place.
Look, there's definitely been a pivot. There's definitely been signals since the September 24th joint press conference with PBOC. There's clearly a pivot of trying to prevent kind of a vicious kind of spiral downward and providing a bit of a floor. But you're absolutely right. I think the reason why market is very divided and concerned is I think there is still lack of detail of kind of new demand support, especially, as you said, deflationary pressures. I mean, we had core inflation over the weekend. There was just barely, it was barely averting deflation. It was like 0.1, which is the lowest that we've had since, I think, March of 2021. So really, obviously, the consumption support, that one I think was a little underwhelming. And I was a bit disappointed that the only thing we got in terms of details was like student subsidies. Like, I think people were hoping for something more given the stress. So you're right. It seems like obviously local government finances and the constraints of abrupt fiscal tightening because local governments are losing, revenues are not enough to offset the spending and they're cutting. That obviously is making things worse. So they are providing a little bit more guidance. But even in this press conference, we only got they mentioned 400 billion renminbi using unutilized bond quota to support local government. And 400 billion renminbi, we think for this year is still too small relative to the 1.4 trillion revenue shortfall they've had in January to August. So you're right. It seems like, there's a little bit of forward guidance, but the details still, I think there's still a lot of concern. It's not enough to provide a sufficient floor and support on demand.
Got 20 seconds before I hit the break. Just quickly, have you upgraded your GDP target for 2025?
No, I think it's too early at this point. It's too premature. Let alone 2024, which I know other competitors have because it's already October. But I think 2025, we really need to see more details, so we'll have to wait and hold out.
Got it.
And we also have a pivotal election coming up in November, and that's something we need to watch out for.
It is.
Too.
Right here in the United States. Joanna Joya of Citi. It's good to see you. Thank you.
Thank you.
Appreciate it. Coming up next on this program, Chris Harvey of Wells Fargo, Isaac Boltansky of BTIG, Neela Richardson of ADP, and Ocean Kwan of Bank of America. The second hour of Bloomberg Surveillance just around the corner. With equity futures on the S&P 500 just about positive on a 5-week winning streak. We had some weight to that rally this morning, up by about 0.2%.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zabe Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The market has been trying to push in too much policy accommodation. You do need to see earnings estimates continue to rise, we think, in order to support the market.
We're expecting that the S&P can maintain a higher than traditional valuation setup premised on much more resilient fundamentals than many would have thought.
Investors probably have to lengthen time horizons. It's just not as beneficial anymore to be as near-term focused.
I don't think after a bull market, so to speak, in both equity and credit that has lasted this long, has not sucked in most investors.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance begins right now on a 5-week winning streak on the S&P 500, the longest weekly winning streak going back to May after posting the 45th all-time high of the year so far on the S&P 500. We're at record highs coming into Monday. Your equity market looks like this. We're down by 0.2% on the S&P. On the Nasdaq 100, we are up rather by 0.25%. On the Russell, up by 0.1% as well. The week ahead is absolutely stacked. On the earnings, we'll hear from Bank of America, from Goldman, from Citi. For the data, look out for retail sales on Thursday. And for the central bank decision, look out for the ECB on the same day. The ECB under a lot of pressure to reduce interest rates in a few days' time.
And to give some guidance that they have more interest rate cuts that are coming down the pike. A real question for me is how long can we believe in the soft landing, the sort of Goldilocks, or even potentially a no landing with consumers that seem really robust? And that's the reason why retail sales really is the highlight with, to me, along with some of those bank earnings. How much do we get that signal, as we have already? The consumer is incredibly resilient. They're not using up their cash yet, and we're not seeing some sort of imminent recession.
The United States is looking inwardly in more ways than one. We're looking ahead to the election coming up a little bit later in the next month or so. Europe's looking at China, and China's looking at America. Europe's looking at China for stimulus, and China's looking at America to see what the outcome of November actually is on the election front.
So this is a speculation. The reason why we haven't gotten better guidance or more guidance in terms of a headline number, as well as efforts to stimulate the consumer appetite in China, that they're waiting for some sort of sense of who's going to win the U.S. election before understanding what they want to deploy on their end. So far, we are getting the right words, we're getting the right signal, but people are not getting the same confidence from China that they can really stimulate consumer demand. And then for Europe, they're struggling with understanding how much increased Chinese demand will actually help their economy, because is it going to be domestic consumption for China or external consumption?
This was all borne out in the conversation we just had on this program 10 minutes ago with an economist from Citi. And we ended that conversation with a very simple question. Sounded a little bit more confident. Have you upgraded your GDP goal, your target, your forecast for 2025? The answer, no, not yet. Need to see what's going to happen with Chinese authorities and need to wait and find out what happens here in the United States.
There is a difference between putting a floor under potential declines in growth and actually stimulating. And in order to stimulate, you have to have some sort of more holistic sense of what you're looking to do from a policy perspective. And that really goes to the heart of the trade wars that everyone keeps talking about amid the U.S. election.
The grind higher in this equity market continues, up by a little more than 0.1% on the S&P 500. Remember, the bond market is closed stateside for a national holiday. So no Treasury cash trading this morning.
Can I just say, why did the bond market get this right and the stock market get this wrong?
You mean closing for federal holidays?
Yes. I mean, I don't understand this. This was something that was a discussion at home last night where other people in the household didn't understand this.
What did you say back?
I can't understand it. The bond market's right and the stock market's wrong.
Are you annoyed because we're at work? Is that what this is about?
Well, it just seems ridiculous. Like, get on the same page. Why is this always the case? There's the stock market and the bond market. It's sort of, figure it out.
Brown, it's America.
Get together.
We can't even agree on what's cool today.
Exactly.
Never mind getting the equity market and the bond market to see things the same way.
I feel like today is a day of internal division, and I feel like the fact that the bond market
is... not what it used to be. Is that what we're calling this?
This is the day of internal division.
Okay, it's not the conversation I wanted to have. Coming up this hour, Chris Harvey of Wells Fargo, as the US bull market turns to Isaac Boltansky of BTIG, as the election race tightened. And Ocean Kwon of Bank of America on a stock picker's paradise. Look out for that in about 40 minutes' time. We begin this hour with stocks at record highs and earnings season underway on Wall Street. Chris Harvey of Wells Fargo saying early third quarter earnings results have been mixed, but investors appear to be cautiously optimistic. Chris joins us around the table. Chris, good morning.
Good morning.
What's the big takeaway from the early reporters so far?
So far, so good. It's too early to make any big predictions, but if you were expecting the wheels to fall off the cart, you're going to have to wait a little bit longer.
What did you take away from the banks on Friday?
It was pretty good, right? So what are we looking at? We're looking at a situation where the Fed's cut 50 basis points. Yes, rates are going a little bit higher, but they're still pretty low. I think it looks like GDP for third quarter is going to be around 3% if you follow the Atlanta Fed. And now you're having earnings that are okay. That's a recipe for higher stocks, and that's what we're getting.
So does this give you sort of the feeling that you want to lean in and actually increase your exposure? Or, I don't know, I was reading your notes and I was wondering, where does this leave you? Because you're basically saying we're kind of range bound. I don't know, take the rest of the year off. Why do I have to keep doing this? Why am I here on a day when the bond market's closed?
I think what it means is you should be more balanced and that more companies should participate, and that's what you're seeing. It's also saying, hey, the economy's okay, right? If you're talking about recession fears, you probably shouldn't. And your point about people not raising their economic forecast, if you look at the Fed, you look at the sell side, they're still talking about 2% until the cows come home. You know, we saw this. We saw this earlier this year where people were expecting the economy to be in recession. I think we came in with 1.3%. Right? And then what happened in the beginning part of the year, we were talking about reflation, where materials, energy, industrials all traded higher because the economy was better. But it actually wasn't the economy. It was just forecasts being revised up. And I think we might see that. And partially, I think that's what's going on right now. People are realizing the economy's stronger, so people should participate, or more economically sensitive companies should begin to participate a little bit more aggressively.
So what do you need to see from earnings? Is it really third quarter, or is it some sort of visibility into the future? Is it a sense of confidence that they can actually make big moves? Because some people are worried that the lack of certainty itself could actually foster some weaker growth ahead, just simply because a lot of companies don't want to make big moves.
So I don't think we're going to see a ton so far, because as you point out, we have event risk. We have the Fed, or we had the Fed. Now we have an election coming up. No one's really going to say anything. What we saw from ISM Manufacturing is a lot of people are saying, hey, we will spend. We have the ability to spend. We're not ready to spend. So while you may we're looking for better guidance, but we're just probably not going to get it because people aren't ready. They're not sure who's president. There's a lot of event risk. And so really what we fall back on is how are fundamentals right now? The fundamentals right now, not bad.
Mike Wilson spoke to some of this from Morgan Stanley. Similar theme in the last week on this program. He said investors have just attached themselves to themes. GLP-1s, AI, utilities exploded through 2024. Come off the ball a little bit on that front. What's the theme that you want to really grab hold of right now?
You know, we're struggling with that. We're looking more of a trade. You know, what we do think is you're broadening out. We think you got a good shot at small caps ending the year on a really high note. But the theme is really more about producers and then consumers at this point in time. I think 2025, you're really going to want to dig into industrials and cyclicals, because we are seeing that dynamic between price and unit volume beginning to inflect. And that's really positive for earnings on the industrial side.
Just elaborate a little bit. So you think that producers and the consumers should be the ones that benefit the most?
No, I think the consumer's fine, as you were alluding to before. The consumer's fine. Our issue on the consumer is, as long as you know the consumer has capacity, they will spend, and they still do have capacity. But do we really want to lean on that? No, we really don't want to lean on that. Where we want to lean into is we want to lean into these mega projects. We want to lean into that secular story around electrification. And oh, by the way, what we're seeing for just general industrial companies is that unit volume price mix is starting to turn positive. They've held on to price, and now unit volume is starting to turn up. And that's a really interesting dynamic for 2025.
You talked about the election. We were speaking with Lori Calvasina of RBC earlier this morning, and she was saying that a lot of people are also waiting to see what happens with the election. And then John asked her, what are they waiting for? What are they going to do with either candidate? And she said, they just want to have an answer so that they can move on. Is that basically what you've seen too?
They want certainty, and then there's just two different betas. And I think the stock market will react positively, but you're going to have a very different reaction from a Trump win versus a Harris win. I think under a Harris win, it's going to be very growthy longer term, right? The model you should take forth is what happened under Obama and Biden. if Trump wins, at least for the first 3 to 6 months, it's going to be value, it's going to be banks, and it's going to be small caps. So really, while people are just waiting for a result, and the market probably trades higher because they get certainty, very different reaction function.
Are you confident we even get a result that week?
Pretty confident, but I can't guarantee, right? The other thing is, if you go back when we had the hanging chads, that was something that we probably won't focus on this time forward. What it'll be is things will be too close, and you'll have to have an automatic recount, which that doesn't go to the Supreme Court.
How do you think the market's going to trade that story?
Not well. I mean, initially, you'll see some negativity, but I don't think it's going to last very long. So as soon as they get it resolved, we're back up.
I can tell how excited everybody is. I don't think we're going to have hanging chads. We'll just have other issues. I mean, that's basically what everyone's talking about. You asked the right question. If we don't have an answer, at a certain point, how do markets handle that? And are people basically lining up to buy that volatility because they assume that essentially there will be some sort of certainty?
I don't think anyone knows what to do with this election. I think they got it wrong in 2016. They thought ultimately that Donald Trump would be a risk-off candidate for markets. They learned pretty quickly that morning that he wouldn't be. This time around, I think we've all got these scenarios, and no one knows what to do. I feel like there's an element of burying our heads in the sand just a little bit. That the reality is, the base case, if you ask actual people who are following this election really closely, who aren't in markets, who are just charged with trying to understand how this is going to play out, they'll tell you their base case is you won't get an answer the morning after the election, that this could take days and maybe even weeks. I don't think the market's on that page at all, Chris. That's not what I hear from market participants.
What I would add to that is geopolitical is pretty hot right now. Okay, if we don't have a president, that geopolitical probably gets hotter real fast. And then we have a lame duck president. Whoever wins, right, doesn't come into office until next year. You have we have situations across the globe that could heat up very, very quickly. And when people may want to challenge that and say, hey, I see an opportunity, and that could cause a lot of volatility.
With that in mind, are you looking to Asia or to the Middle East?
Both. Asia, Middle East. It's really, if you look across the globe, one of the things we think about it is they're going to challenge the new regime, whichever regime that is, right? Things are as hot as I've seen on the geopolitical side in a long time. And that's my big, like when people saying everyone's feeling pretty confident, everyone's feeling, okay, things are good, but the big concern, the big risk is what happens on the geopolitical front, either if we don't have a president or the fact that we have a lame duck president and the new president really can't do much until he or she is put into office.
Just to put a line under that, how much then is the hedge to buy oil companies rather than, say, treasuries or treasury-like exposures?
Yeah, I think the hedge is more on the commodity than the stocks, and you've obviously seen the commodity do pretty well. The stocks, we're not big fans of, and I'm not sure you're going to get the right reaction. So the commodity seems more sensitive and likely the better hedge at this juncture.
Chris, it's good to see you. Appreciate your time, buddy. Thank you. Chris Harvey of Wells Fargo. Equities right now on the S&P up by a little more than 1/10% with an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Goldman Sachs has upgraded its forecast for China's economic growth in 2024 and 25, spurred by Beijing's announcement of a series of measures to shore up growth, including plans for greater public spending. The bank expects China GDP to expand 4.9% this year. They did see it at 4.7 previously. It also lifted its growth prediction for the following year to 4.7 from 4.3%. Taiwan Semiconductor is expanding its global footprint and eyeing Europe for its next chip-making plants. A senior Taiwanese official said that construction is underway in a facility in Dresden, Germany, with speculation that another plant could soon be announced in the Czech Republic. TSMC has spent billions in recent years to develop plants in allied countries like the U.S., Japan, and Germany, with risks looming over tensions with China. The Harris campaign is trying to draw attention to the health of the candidates. Harris released a detailed medical record that claims the vice president is in excellent health, with data on her blood pressure, diet, and lifestyle. Harris challenged Trump to release his medical records, which he has cooperated in his prior presidential campaigns. Trump told CBS he'd gladly release the records, but so far has declined requests to do so. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the program, Trump and Harris, neck and neck.
She's so bad. She's so bad. It can't happen. Although the way things go in this country nowadays, I guess it probably could.
One must question, are they afraid that people will see that he is too weak and unstable to lead America?
You still have a few more weeks left of this. That conversation up next, live from New York City this morning. Good morning.
authorities.
Could face bigger challenges next.
It was going to keep bringing the World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Equities a little bit firmer, up by 0.1% on the S&P and change. In the FX market, the euro a little bit weaker, we're down 0.1%. Look out for the ECB decision this Thursday. Under surveillance this morning, Trump and Harris neck and neck.
She's so bad. She's so bad. It can't happen. Although the way things go in this country nowadays, I guess it probably could. That's why we want to build up a lead.
He's not being transparent, so check this out. He refuses to release his medical records. One must question, are they afraid that people will see that he is too weak and unstable to lead America?
So here's the latest this morning. Trump and Harris campaigns narrowing in on swing state voters as time runs out ahead of Election Day. The candidates are deadlocked in the latest NBC polling as Harris reportedly sees fizzling momentum. Isaac Boltanski of BTIG saying there are concerning data points for the Harris campaign. In particular, we continue to highlight that Trump meaningfully outperforms Harris on the top two issues for voters, the economy and immigration. Isaac joins us now for more. Isaac, welcome back to the program, sir. It's good to see you. Do you still have Trump as a slight favorite? And give us more detail on why.
You know, with the caveat, John, that no one knows anything, right? And we're all just applying our mental models and we're doing our best to read the tea leaves. But no one can have the utmost confidence in polling, given how terrible it was during the last cycle. I think what I've tried to do is focus in on one mental framework for this election, and it's what do swing state voters care about? And in every single poll, they list the economy and immigration as their number one and number two issues. Trump has maintained his lead on both of those issues since the beginning of the election. It's a relatively healthy margin on both of those issues in the swing states, and that's my mental model, with the caveat that no one really knows what we're when we get into election day.
Isaac, it's a major caveat that no one knows anything, but I'll run with that caveat. No one knows anything. One exercise people were doing over the weekend, and I saw this repeatedly, and I'm sure you're familiar with it, they were comparing where the former president was in previous polls in 2016 and 2020 in swing states, and then how he performed in reality when the actual vote came around. And what you saw was just outperformance after outperformance, Isaac, and they're looking at these swing state polls and suggesting that maybe we get that outperformance again. How valuable is that exercise, considering that we've done this now for 3 times?
You know, look, in talking to pollsters, which we spend a fair amount of time doing, the pollsters believe that they have solved some of their issues from 2020 by focusing on voters who have actually voted. And we're going to see if that has an impact. But John, I look at the quote unquote blue wall states of Michigan, Wisconsin, and Pennsylvania. In 2020, Trump outperformed the polls in those states by 5 to 6.5 points. Given that he's in a dead heat of 1% or so in each of those 3 states against Vice President Harris, you have to have at least a modicum of a sense that the Trump campaign might outperform those numbers again, at which point we're not in the margin of error like it seemed for the past few weeks.
One of the big question marks is whether pollsters have actually adjusted to what happened in the past 2 elections. I mean, have they communicated that they've tried to adjust for this discrepancy, or are we probably doing a repeat?
Look, I think that structurally you can get a degree of comfort that they're changing things. But the fact here is we still don't have the methods and the means to get a good read of sentiment. This is not 45 years ago where you could just dial folks up on the phone. I also think that we've got to keep in mind there is undeniably a quote unquote shy Trump voter. That's something in polling that you hear referred to as the Bradley effect, where folks just won't tell you their viewpoint when they're on the phone. I think that those things are really things you can't solve for now. And so I generally think of polls as giving us some indication directionally of where we're going, but we can't look at them for any degree of this.
Isaac, you said that nobody knows anything. We'll go with that. A big question is also composition of Congress. And you put out these figures in your latest note that I thought was fascinating, that you believe that Republicans have about a 75% chance of winning the control of the Senate and a 55% chance of retaining control over the House. Basically, put this all together, we're looking at a much greater likelihood of a red sweep than what is currently being priced in or figured by most people out there. How do you sort of talk to your clients about that?
Yeah, look, there are two points that we try to make. Number one, on the presidential election, there are certain themes that you can sink your teeth into that I think are going to occur no matter who wins. Right. One is we're going to continue deficit finance spending no matter who wins. That's a theme on that end. But in terms of looking at D.C. and the different permutations, I have utmost confidence that the Senate is going to flip to Republican control. And here it's about geography and arithmetic. In terms of geography, Democrats are defending really, really tough seats in Ohio and Montana. In terms of arithmetic, they would have to run the table on all of these just to have a shot at maintaining the upper chamber. So in an election when no one knows anything, and we have to have a decent amount of humility regarding that, the one thing that I can anchor myself to when I try to think about the post-24 election landscape is I think we're going to have a Republican Senate, which has real implications for oversight of regulators and ultimately the fiscal fights that are going to dominate 2025.
Isaac, I have no idea if you've done this exercise, but I'd be curious if someone did. On the campaign trail last week, there was a very important accusation by the former President Barack Obama that black males might not be ready to vote for Kamala Harris because she's a woman. It's quite a statement and a very tricky road to go down, because basically what you're telling a large group of people is this has nothing to do with policy. Basically, he's accusing people of being misogynistic. Now, Isaac, I want to understand from your perspective, and I'd love someone to do this exercise if you haven't. Could you tell me how certain races are performing relative to the top of the ticket? And if there's any evidence whatsoever that someone who's willing to vote Democrat isn't willing to vote for her because she's a woman?
Look, this is part of the problem with the landscape is that we're never going to know what someone does when they go into a polling booth and they pull that curtain behind them, right? We don't know what's going to motivate them at the very last second. So that's part of the reason that I've tried to focus on state level data about, what actually motivates some of these voters. And again, it's the economy and immigration. But John, I can't tell you if they're going to go into that voting booth and say, today, I'm not as worried about the economy. Today, I care about healthcare choice, right? At which point you have a complete different outcome. And so to me, I don't think there is an answer to that. I think that's why you're seeing such targeted ads over the past few weeks, is that the campaigns themselves have been able to hone in on some of these messages that they think are going to motivate very specific groups of voters. But I don't think there is an answer for that yet.
On a larger level, what is the reason for this huge gap in gender? Because that's really one of the themes that we've seen in this election, just the difference between men and women.
Yeah, look, there's always been a gender gap, right? I mean, if only men voted, I don't know if there would be a Democratic Party anymore at this point. So there's always been a gender gap. But I think what you're seeing is a more pronounced gender gap that is localized in people of color and Black and Latino voters. I think that surprised the Harris campaign. And B, that it's been somewhat persistent. I mean, the Harris campaign has done a pronounced effort in getting out to male voters on certain issues. And so I think that they've been surprised, A, of the gap, and B, of the persistency there. So look, I think part of that you can absolutely ascribe to some structural misogyny. Sure, I think that's something that you're seeing from the Harris campaign highlighting it. But I have, again, enough humility here to know that I don't know what motivates every voter. It's just something that when you dig into the numbers, it's there. And it's something that I think is becoming one of the defining themes of this cycle.
And Isaac, just quickly, wasn't it there before Harris? Wasn't it there when Biden was top of the ticket?
Yeah, look, I think that this is one of the reasons that you could see the coalescing around Biden in the primary. So look, this is a structural dynamic that's at play, and one that I don't think is just about this election. I think it's a bigger one that we're probably going to have many, many conversations about to try to understand. But we're 21 days out here, and we're going to see if this is one of the singular themes that moves the election or if it's something else.
Certainly a big theme right now. Isaac, appreciate it, sir. Thank you. Isaac Boltanski there of BTIG. It's becoming a bigger and bigger issue on a campaign trail.
Did you hear what he said? That if only men were voting, then there wouldn't be a Democratic Party. I mean, basically, this gap has gotten incredibly wide, and we need to have a lot of conversations about why it exists.
It's never any one reason. There is always going to be many, but one, and they're not willing to discuss it. The left has been demonizing men for a long, long time, and for other males, they feel like that's no longer a party for them. And I think you see that in the polls.
Well, and we'll see whether people turn out, and that will ultimately come down to who wins.
Live from New York, this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's
let's focus in on European politics.
Makes you wonder how politics might play out.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Stocks are firmer across the board here on the S&P 500, up around about a tenth. Similar move on the Nasdaq. Likewise on the Russell, up by 1/10% on the S&P 500. On the Nasdaq 100, up by 0.2%, following 5 consecutive weeks of gains on both the S&P and the Nasdaq 100. If you turn the page and get to foreign exchange, let's take a look at the euro and take a look at pound sterling. Cable, 130.46. The pound just a little bit weaker on the session, going into an important conversation later on this morning, 2 hours away. Keir Starmer, the British Prime Minister, sitting down with Bloomberg's Stephanie Flanders. The outlook for the economy in the United Kingdom. And Lisa, ultimately, what's going to happen with the budget in a few weeks' time?
Especially after some pretty dire comments we've heard from Keir Starmer. Sort of this question of how much did he come out with a sense of being sort of practical, budget, being balanced kind of type of candidate. And then when he actually is putting it into policy, it's looking a little bit different and giving a whole bunch of different constituents some anxiety.
It's been a tough 100 days, hasn't it? It hasn't been great at all. Their approach to the economy, to the deficit and to financial markets, it's like a document that was written for the immediate aftermath of Liz Truss, and they never edited it. When things settled down in financial markets, when the economy started to improve, it just feels like they're looking at a rearview mirror to a different place.
It looks like there's an emphasis on reducing debt rather than juicing growth. And at a certain time, when companies are looking for some confidence that the policies are in place for them to feel comfortable expanding in London, expanding in the UK, they're not getting that in any kind of practice from this administration.
That effort starts this morning. There's a summit where they're gathering business leaders. If you're familiar with the one that Emmanuel Macron leads over in Paris, France, earlier on this year in May, it's kind of like that. All the CEOs coming together. Francine's been speaking to a few of them already this morning. That emphasis is shifting back to growth, but it's taken a number of months to get there.
As you said, a messy 100 days as they try to figure out their footing and how much input are they going to actually get from these companies and how much are they going to listen. As you heard that warning from some of the big bankers, if you don't make these changes, you will permanently lose your stature as a major global financial center.
Let's turn to the commodity market. Brent crude, WTI trading softer, lower by more than 2 percentage points. A headline that just crossed the Bloomberg terminal 5-6 minutes ago from OPEC, cutting their global oil demand growth forecast for a third straight month.
And what this really comes down to when you look at some of the details is just adjusting to the actual demand that they see on the ground. They also have some forecasts for U.S. and European economic growth. In the U.S., they're talking about upgrading the forecast for this year to 2.5% from 2.4%. Next year, keeping it around 1.9%. Get this for the economic growth forecast for this year, 0.8%. This is not an area that is growing, and that is currently what we're seeing in Germany. How much does that color the sphere versus just simply this idea that people are transferring to other types of energy output?
Quite a tug of war, isn't it, Lisa, right now? The risk of a supply shock and oil prices surging, and on the other side, the risk of softer demand, captured by this OPEC report this morning.
I can't help but be a little bit cynical, and I wonder if this lays the groundwork for them to prolong some of the cuts to supply so that they can get prices to go higher, but that's just me.
I don't know if that's cynical. I think that's rather intuitive after what we've heard from them.
If you just think about it, it doesn't really seem like they're cutting growth forecasts. It doesn't seem like there's any other reason. So if they're cutting their demand growth forecast for the third straight month at a time where they're trying to prop up prices and potentially going to keep some of the production cuts in place, well, you put those two things together and this makes sense.
That's the latest from OPEC this morning and from Lisa on the crude market. Under surveillance this morning.
Speculation.
The U.S. is sending an advanced missile defense system to Israel to help shield it from further attacks from Iran. The Terminal High Altitude Area Defense will support Israel's own air defenses, which were stretched by Iranian attacks at least twice already so far this year. And as you said, Lisa, I think you're right. We're preparing not for the retaliation from Israel to Iran, but potentially the like-for-like coming back from Iran, if that's what we're going to see.
Which is the reason why Halima Croft said, look at any people who are selling crude in a relief sort of sale as being a bit premature, because ultimately it is the tit for tat and how much this escalation does continue. And ultimately, there is clearly an effort to prepare for an escalation on both sides.
Gone into the last few weekends waiting for that retaliation and still waiting this Monday morning. Let's turn to this story. President Biden announcing $612 million in recovery aid for areas damaged by Hurricanes Milton and Helene. The White House saying funds will go towards 6 Department of Energy projects to strengthen the region's electricity grid. That's been a big focus for us over the last few days.
And just the fact that the maps that they had for the potential destruction of these two storms, which are very different in nature and the ways that they were destructive, were totally outdated. The U.S. flood maps were drawn up in the 70s and 80s. They were not drawn up in the current climate. And that, I think, people are looking at also to understand what they need to do to fortify some of the infrastructure to get it prepared for more of the same.
Asheville, North Carolina wasn't something that everyone talked about with regards to floods.
People didn't think that that region was going to be as susceptible. They also, how do you prepare for such different types of threats? On one hand, you had just a deluge of rain and flooding from the mountains, and on